Arrow always does legit DD, so I always tune into him. But what am I coming across constantly? This is what I'm constantly coming across. Finance news, bullshit, lying, not even clickbaiting, blatantly lying, taking up the YouTube feed with all of his shit. Joe Biden just, apparently he's making a shit ton of money and getting a lot of views by baiting you guys with anything that says just confirmed the squeeze. Joe Biden apparently Joe Biden owns AMC. He just confirmed the squeeze. Adam Aron's confirmed the squeeze a million freaking times. Dead people are confirming the squeeze with Johnny Depp's confirmed the squeeze with this guy. Apparently Elon Musk owns AMC because he's confirmed the squeeze a million freaking times. I just saw a video that said Elon Musk goes all in with AMC. Elon Musk doesn't even own a single share of AMC. My problem with this dude, first, he's got more subs. He's got like 60-something thousand subs. He's got more subs than Tony De Niro. Tony De Niro's legit. It's all DD. It's all straight. If the title says anything, bet your ass with Tony De Niro, the substance of the video matches the title. He's not just laying out a title for you to click and then you watch the video and you're like, what the fuck? That has nothing to do with what you told me the video pertains to. Whereas every video of finance news, Jimi Hendrix has confirmed the squeeze. Dead people, Elvis Presley has confirmed the squeeze. You know what I'm saying? Ronald Reagan confirmed the squeeze. How the fuck are people still tuning into this piece of shit? If he was a used car salesman, finance news would have dead rats behind the dashboard of every car he sold. Like the fucking battery would be duct taped and like the starter would have coat hangers sticking out of it. Yet finance news would be like, it's the most reliable car on the lot. Fuck, Joe Biden's confirmed it's the most reliable car on the lot, bro. Come on, man. Joe Biden test drove this car. Yet if Tony De Niro sold vehicles, bet your ass you could go years in that fucking vehicle. It's a reliable vehicle. You got a guy that's honest and trustworthy with hardly no fucking subs that'll make you a lot of money and teach you about the fucking market. I tune into this guy every day. I learn a lot. You want to learn the lingo? Watch Tony De Niro. You want to learn nothing? Tune into fucking this liar. It's not even clickbait. He fucking lies. Guys like him don't just lie on YouTube. They lie in real life. They cheat in real life. It's not like you can lie your ass off and cheat people on YouTube, and then in the real world, which that is the real world, by the way, you're a completely different person. No, this guy's fucking people over everywhere he goes. Whoever the fuck you are, finance news, you fuck people. You are the lowlife of this earth that fucking hurts people. So why don't you start titling your videos proper, all right? Joe Biden's never confirmed the squeeze. Elon Musk has never confirmed the fucking squeeze. Every time you fucking post one of those videos, dude, I think I need to post a fucking video calling you the fuck out for that shit because you're wasting my time. Your bullshit is in the YouTube feed deterring me from real DD. It's hurting me. It's hurting people that really need to find the fuck out what's going to happen today in AMC because you got to make money on YouTube. You got to make money on YouTube. You got to lie your way and cheat people into clicking on your fucking video so you make more money. You're a piece of shit. All right, guys, unsub from finance news. I mean, if you really want to make money in the stock market, and sub to Tony De Niro. That's the best fucking advice I could give you today. Y'all have an awesome afternoon. Doge Warrior out. Shaboom. Peace.
Well. Teddy Zane goes nuclear on finance news. That's something I would have done last year. This year, I don't know. I'm not going to rule it out, right? I'm not going to rule it out. It's a possibility. But It's so much more fun to watch somebody else go nuclear on these guys. Roid raging. Indeed. Oh, the Evergrande FUD. Oh, the 100K. Wow. I just took a shower and came back out, and there's like 4 new grifter videos here. God damn. What's up, Model 3 dude? Ay, ay, ay. Swear to God. So, Teddy Zane. Teddy Zane was stepping out to Finance News. Don't blame him. I watched a Fat Man earlier. Went back and watched a couple of his old videos. And, of course, the one that I saw was from, I don't know, sometime in March. And it was right around the time when Teddy Zane was, like, selling and, you know, kind of calling out the movement. So, Fat Man said, you know, hey, this Teddy Zane guy, you know, he was saying some stuff that was actually good. You go watch Teddy Zane. And I had to leave a comment and say, well, Teddy Zane is back on the grift train. He's back on the grift train. Sadly. I mean, whatever. Sad or not, I don't know. So, oh man. Trey with a 25 fucking minute video, 100K. Now he knows damn well that this thing is not going to go to 100K because it can't fucking go back to 72. It can't go back to fucking 36. We'll see if it can go back to 24. But let's see. I don't know. Jesus Christ. I mean, obviously, there's no way I would watch this whole piece of shit.
per share. This has been a topic of discussion for quite some time. People will say, not selling to 100,000, baby. To the moon, to freaking Pluto, to this and that. And 100,000 has been hypothesized. And I've seen theory videos, and I've seen math behind it, and I've seen insurance policies and who would pay for it, and this and that. And I've always stayed quiet on the topic for one reason and one reason only. And I'm being honest to God here, is because I was scared. I was scared to discuss this topic. I did not want to have the backlash that I think is going to come discussing this, but I am going to discuss it today nonetheless. Because I think it's important, and I think
great.
People out there who need to sort of do the math, right? And I'm going to walk you through the math. So, guys,
wait, is this an anti-100K video?
I think I'm perfect by saying that I'm not a financial advisor or expert. So, take what I say with a grain of salt. Let's get into it today.
Oh God,
I have a claim, right? And there's good news in this. I want you to know that, right? I'm going to give you a silver lining at the end.
I'm going to give you a silver lining at the end because, you know, it wouldn't be one of my videos if I didn't do that. So maybe I can slide in my common sense, quick, clean, common sense debunk of the Moass here in this video.
At the end of this video, but we do need to have a talk about realistic expectation and money and math behind how something like this would be possible. I'm going to make a claim. $100,000 per share is statistically and mathematically impossible.
Oh,
now,
shit.
Right off the bat.
Whoa. Did you hear that? Oh, my God.
This would be possible. I'm going to make a claim. $100,000 per share is statistically and mathematically impossible.
Oh,
now,
shit.
I know that right off the bat, I'm probably going to lose some of you.
Whoa.
It's okay. If you want to unsub to the channel, please do. If you'd like to
sub to the
channel, please do.
This video's been out like half an hour. We're going to have to go over to Social Blade. We're just going to have to look at it. I don't know if anything's going to be reflected, but, you know, I think that the YouTube viewership is kind of like, well, it is a market, you know, it is a market. So is it as efficient as a stock market in pricing things in? We'll see, right? We'll see. Now, unfortunately, when you get up to these numbers, you know, the resolution just isn't there. That was last week. So I thought we had. Yeah, see, it only says 391, but it has gone down from 392 to 391K. Daily averages minus 33. I guess we can't get a, well, this is weekly. Yeah, see, it's not, obviously it's rounding. Son of a beach. Here we go. Maybe we can, but that's not, there's no way. Anyway, well, we'll just have to keep our eye on that.
I'm not here to tell you what to do. I'm not here to tell you what to think of me. What I am here to do is tell you what I personally believe makes sense because of math. I'm going to give you some reasons why. This is the agenda. I've got a list of problems, a list of counter arguments against the problems, right? Things that I've seen people state towards me in terms of, hey, this is why this would be possible. And we're going to make arguments both ways. All right. Then I'm going to give you the resolution, which is down here below. So to start off with, there may be people out there who don't know what market capitalization is. Market cap is the value of a company that's traded on the stock market.
But see, we don't even need to go into this.
Which is actually how much the company
we don't even need to go against it. We don't even need to go into this.
Multiplying it by the share price.
Total stock market cap. Okay, I mean, cool.
The ticker is shares. You get a market cap of 2.35 billion.
Okay.
3 zeros, right? 3 zeros, 3 zeros, 3 zeros, 49. Some of this could be debt. Some of this could be rehypothesis that exists. The free float, in case you didn't know, comes out to about 515 million shares. I'm going to pull this up. 515 million shares right here is the free float of the stock, and that is...
Well, actually, it's 516 and change, and I just went back and looked at the 8K, the last filings that came out, and it was something like 5 million, I think it was about 2 or 3 million shares were issued as compensation and awards between last quarter and this quarter. So that's awesome. You know, I don't know if anybody has caught that, but I know people have noticed that the float went up from 513 million to 516 million. So, you know, but you can actually see that in the filings. If you look at the actual filings, which maybe I will, but on this stream, we'll see.
Not including any sort of shares that could be rehypothecated, naked short sold, or
blah, blah, blah.
And I do believe there are synthetic shares within this stock. I think that's very likely considering the math behind it. I'm not taking away from that in the least bit. I think that you take 90% of the company being owned by retail and 35%.
Why are you still repeating this 90% nonsense? Why is he still repeating that? Seriously. Does he actually believe that? If he actually believes that, he's dumber than I thought. So I'm just going to go through this because it's super easy. Simple. Simple math, like Trey says. Simple math. We don't even need that on. This is a weekly chart for AMC. So here's the run up right here. Now, one thing is this whole area back here, right? Nobody bought AMC at these levels back here. Nobody ever did. So every position, every share that was sold or bought, because, you know, the transaction includes both sides, but for retail, every share that was bought at any price level above, what is this here, like $27 was from June 2021 or later. Here, this area, right? So nobody bought AMC before the run-up at these price levels. Seems obvious, right? So then when we get to this run-up in last June, as a result of nobody holding AMC at these high levels before that point, you have very few, if any, sellers here. So this is all people buying in, buying in, buying in, buying in, buying in, riding the wave, holding, you know, buy and hold, right? That's when that started. So you have no natural sellers here. You have no natural sellers. You have nobody who is holding from back here who is waiting to dump it here at a profit. Okay? So now, also couple this with the continual narrative. Buy and hold. This isn't the squeeze. Buy and hold. When quite literally that was the squeeze. You can look at any short squeeze play on a chart, and they all look like this. There's a large, huge impulsive move. It's the first move. And I switched to a daily chart, but here it is right here. This is the move right here. This is where you wanted to be. Right? So, what do you have after that? You have this basic shape. It's like a bouncing ball. This is a natural motion. You have a large impulsive move, and then you have smaller moves like this. And that's a very natural motion. It's an impulsive move. Go into a church and clap your hands, and you'll hear reverberations, echoes, and it'll trail off. Take a basketball and, you know, throw it against the ground. Big high bounce. Second one will be shorter, 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 shorter going on. That's really, it's mean reversion. So, again, we have nobody buying back here. We have no natural sellers here. In fact, we have buying. More buying than selling. All right? And we can see that on a volume profile. We can see that in all these price levels up here, all of them, you have more green than you do red. So that indicates more buying than selling up here. Pretty much every level. This one I'm not sure, but that's 40, 50. So now this thing has been going on for over a year. And you still have these influencers saying the squeeze is right around the corner, margin calls are coming, this and that. Okay, but no rally is sustained. We have a rally here. It's not sustained. It's sold off. We have these rallies sold off. This rally sold off. This rally sold off. And now we have the most recent one sold off. And why is that? Well, it's exactly what I've been talking about. Because now, unlike before the first run-up, where you didn't have anybody, you had nobody who bought at these levels back here. Nobody bought there. Not one person, not one share. Now you have millions of people, millions of shares that were bought at these price levels here. So this is an overhead supply. It's an overhead supply. You have millions of shares that were bought at these levels. As this thing drags on, I don't care what the apes say, there will be some that will hold until zero. There will be some that will hold until zero. And then they are the ultimate of noise. They matter the least. But you're already seeing it. You're already seeing it. I'm seeing it in comments. You're seeing it in the chart. You're seeing it everywhere. You're hearing people talk about it. People are trying to get the hell out of this thing. They are trying to run to the exits and preserve as much of their equity, of their capital as they can. So this was a fantastic opportunity for a lot of people to do that. Here. Now, so you have this impulsive move. You have no natural sellers. You have people buying in. You have all the hype. Now you have an overhead supply so that whenever the price rallies, for whatever reason, whether it's short covering, mostly short covering, every rally is instantly sold, and no rally is sustainable because you have this overhead supply of bag holders, essentially, that, especially if you factor in macroeconomic features right now, the fact that everything is way more expensive, nobody has money, credit card debt is at the highest level in history, personal savings rates are at one of the lowest rates ever, interest rates are going up, the Fed's about to do QT, and we're probably heading into a recession. Yeah, you're going to see more people selling any rally that they can to try to get anything that they can out of this, as opposed to getting zero out of it, which, again, some people will, but not as many as the apes would like to believe. I'm very confident in that. So there's your Moass debunk for today. Overhead supply. You had the squeeze. You had the impulsive move. That was the move. You'll never recreate it. It'll never happen. I think that's been shown over the last year, this point, of unsustainable rallies, unsustainable price action, and that's it, you know? How is that ever going to change? How is that ever going to change? Because that is the opportunity for the shorts to buy back. So it's brilliant. It's a brilliant plan. Anymore, I'm kind of thinking that, yeah, it was a plan. It was a big scam, a massive scam targeted toward retail investors. And this narrative against short sellers. Pretty brilliant. Pretty brilliant. And they made out like bandits on it. So what do we got going on here? Nothing's popping up. Uh-oh. Always a little nervous when things open higher, right? And we got volatility down a little bit. So we'll probably see this drift down. You know, who knows? I could get tastytrade going here. Trade saying $100,000. I mean, come on, that's ridiculous. That is ridiculous. Now, of course, he did debunk it, but I mean, well, to the apes, a debunk is actually evidence in support of something. So, you know, I'm sure they'll actually they'll actually interpret it as meaning that he said that 100K can happen. I'm guessing. All right, come on now.
And that's a 24/5 market, and usually there's always something to trade. And on Sunday nights, there's not a lot of liquid underlyings, except, you know, maybe crude. That's probably the best of the bunch. Let's see if there's anything else on my screen, because there's nothing else that's perking up. What's natural gas or gold? Gold's doing nothing.
Like gold is up $2.40. Net gas is up 23 cents.
So
one of those rare times they're up. But Yeah, I guess if there was anything to
What's
do,
happening,
maybe
guys?
it's, crude oil options. I have a bunch of positions on in there, but they got to be getting to the point where, let's see. Well, Ivy ranks pretty low.
Yeah, it's still in the 30s.
Yeah. Yeah, Ivy ranks pretty low. That surprises me. And the markets are still in
What's
July.
The euro's down.
In July, markets aren't tradable yet.
No, in oil.
The option markets aren't. The
Yeah.
futures market's tradable.
Remember, that's not 10 cents wide. That's $1 wide.
Yeah.
I mean, $100 wide.
Yep. Yep. You just gotta take it with a grain of salt. So what do you think this week before we bring in the MULN?
Oof, I hate doing that. We had a nice sell-off on Friday, kind of set up for that. You know what? I'm with you now. Volatility at 26. Maybe we just kind of hang out here. Maybe we finish volatility at the end of the week right around here. Maybe we go back up to 28 and we finish, maybe we go down to 25. We finish at 26. Market finishes almost unchanged. I'm calling for a completely unchanged week.
Wow, oil.
The last time
I didn't actually realize it was. It hit 121. Well,
and it traded
almost
to
did.
130 overnight and all this other stuff. I don't know if you remember this, but the Ivy rank was almost 100, and implied volatility was, I want to say, was either 74 or 76, somewhere right around 74 or 76. The last time it broke up here around 100, and now you have implied volatility in crude oil at 51. So it's one of those arguments where
You're talking about monthly implied volatility, right?
Yeah.
Hey, Antoinette.
51 in July. Yeah. And the last time crude oil though was up at over 120, it was like 74, 75. It's amazing. It's come down about, almost 30%. The implied volatility has come down in there, and prices have gone back up. So the option prices are not rich by any stretch, not in crude oil.
No.
So
They're
this
not
is.
expecting
Yeah, we'll
something
see.
insane. This is just like, this is one of those bleeders to the upside.
Bleeders to the
Never
upside.
like these. Those are the ones I tend to get run over on. I do think also that at least this week, I think Amazon's going to be it's going to be the first time that an entire retail public can trade Amazon.
Oh, totally. And Amazon options will be tradable on Monday.
There you go, Antoinette.
I wouldn't trade them for the first hour or so, because I think that the markets are going to take a while to figure out, exactly. They're going to take at least 20 minutes to tighten up, and they're going to probably take a little bit longer than that to figure out, where the vol should be post split. But I think after the first hour tomorrow, we are going to have for the first time another very tradable product in our arsenal.
Yep,
With Amazon. I mean, listen,
21 split.
nobody traded Amazon at 3,000 or 2,000. It's not.
You couldn't use too much buying power.
Yeah, right. So finally, we have another real stock to trade. I mean, another $1 trillion company to trade. All right, let's
Amazon.
Let's move it along tonight. We got a huge crew, and I know some of you guys are waiting for Doc. We have tonight Pete, and then John. JJ is sitting in for Victor. We have then a special guest. We have
Victor's still not feeling good, huh?
No, he'll be fine by tomorrow. We have
60 contracts
special
after the
guest
split. Awesome.
tonight, Dr. Jim, but he's not coming on to talk about markets. He's coming on to talk about his new.
Oh,
Okay. I'm going to pause them. And I'm not going to go back to Trey. But yeah, essentially, this was the move here. Nobody bought a back here at these price levels. This was the move. You had no natural sellers here. You just had people buying all the way up. Uninformed retail investors buying all the way up. Being told to buy, this isn't the squeeze, it's going to go higher. Now you have this massive overhead supply in this price region here at the top that gets sold off on every rally. Every rally gets sold off. Every rally is smaller at lower prices. Pretty much with lower volume too. So it just ain't going to happen. Same thing with GameStop. You know, and I talked about this motion like a bouncing ball. You get the big bounce, and you get one that's smaller, then you get smaller, 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 smaller until it stops. And that's what you got. You can look at anything like that. How about this one? There it is. Smaller. Here's another one. So the concept of overhead supply. It's something the apes really need to start thinking about, especially because of the, like I said, because of the macroeconomic situation. Inflation, interest rate hikes, likely recession, savings in the toilet, credit card debt through the roof, you know, the notion that you're going to hold until zero, that everybody's going to hold until zero, it's a fantasy. And those people are noise traders anyway. They don't matter. But you have just tons of people that are waking up. I see the comments all the time on other people's videos that they're just trying to get out now at as low a loss as they can. They've realized that they've drunk the tang, and it's time to wake up. I'll let Trey go.
Maybe even slightly more than that. More. You've got some of these shares that are being rehypothecated and lent out.
Blah, blah, blah.
The money, it's possible to see that come from somewhere, right? Now we come up to 10,000. At $10,000 a share, you have a market capitalization.
So he's debunking $100,000 based on the market cap. Okay, great. But you don't, like I said, you don't even need to do that. You don't even need to do that. And it is over their head. It's literally over their head, yeah. But I mean, I think even a kid can understand this. I think even a kid, I think you could explain, I think that, you know, even a kid could understand, even a little kid, teenager or younger, could understand this. The fact that you had nobody buying at these price levels back here. So you had nobody selling at these on the squeeze. After the squeeze, because you had so much buying, and by the way, we can see that. We can see it. We can see it here. We zoom in. Get this, let this volume profile equilibrate back to itself. We can see the buying. It's pretty amazing. And I've been talking about this since last year, too. But I mean, at the top levels, 3 million sells. This is at the $69 price level. 3 million sells versus 34 million buys. let's call it 17 million sells versus 72 million buys. 97 sells, 216 buys. This one, okay, you actually had 274 sells, 241 buys. But then you're back to 372 sell, 485, 335 versus 448, 254 versus 291, and then really you have to get down here where you start getting more selling in some of these levels. But as the rallies pop up, they just get sold off. And that's going to continue because how many millions of shares are held at these levels? I mean, we know that there are a lot of them. A lot. So, let's see. You can look at any short squeeze and see that. This is kind of how it works. Oh, yeah. Oh. Okay. Fun times. Okay. Excuse me. Let's see here. Antoinette's got a piano recital. What are you playing at the piano recital? What are you playing at the piano recital? Uh, 3 weeks. Wanted to upgrade the piano with some AMC money. Looks like that dream is dead. Yeah, I mean, maybe Amazon will come through for you. Maybe Amazon will. That would be nice. So, overhead supply is over their head, but it's, you know, like I said, I think I'd like to do one of those Jack Hunter jaywalking segments where I go out, you know, on the streets of LA, Hollywood. I guess I'd have to live in Hollywood or California first, but and it's too long of a thing. But somehow, you know, there's a way that you could verify this. You could, you know, teach it to a 5th grade class. Lou is keeping hope alive. Well, God. Yeah, he is. First selection when the Saints go marching in. Nice. These guys. So we saw the, what was it? Lou versus Wall Street is definitely not a con artist. Oh, okay. Right. Look at Tom Flood Zulo pumping out the FUD on a Sunday? On a Sunday. Rico's frustrated. Aww. Okay, now. We are everywhere. Oh my God. Okay, I don't think we saw this one.
What's going on, my silly over here? All right, let's.
Okay. How long have you been playing piano, Antoinette? Because I play the piano too. I have for many years, and actually was a piano teacher at one time for a few years. One of the many things that I've done. But that was another lifetime ago. All right. Lou.
Listen.
Looks like it was sunny in New York today, at least. There we go.
What's going on, my silly over here? All right, listen. I'm over here just fucking enjoying Sunday. I don't know what the fuck that is, but listen.
It's somebody stretching, Lou. That's all it is.
Waiting for stock apocalypse to begun because of, you know, listen, everything we've talked about and the whole Evergrande. But even more than the Evergrande, I guess people just point at it without talking the behind the scenes and how that goes down.
I know she's been
Look,
in and out, but then yeah.
It's the city. People walk by, whatever. Look at this one. She's trying to move Earth. Push. Continue. A little bit more. Anyway, here's my thing. Tomorrow, well, really tonight, because of pre-market tomorrow, they weren't ready for this shit to happen now. Maybe August. Everybody was waiting for Hustala fuck you. I attract fucking retards. Spread the COVID. Come on. Anyway, my thing is this. Come tomorrow, this shit is gonna hit. The people that are caught up, they already know they're caught up in it. What's the action plan? Everybody thought, the government over there was gonna bail them out.
I mean, okay, but how are they caught? Okay, we need to look at these fundamental questions. The things that are the strongest assumptions, the things that are doubted by the fewest people. Those are the things that need to be questioned. Like, oh, they're trapped, they're caught. How are they caught again? How are they caught when the stock looks like this? How exactly? I don't understand. The lower it goes, the more profit a short position acquires. So, is he really playing on uninformed of people? It's mind-boggling, really.
It's too big to bail out. So they pushed it forward. And at the end of the day, now we have a situation. I got to keep my eye on this motherfucker right here.
And where's the evidence that links AMC to Evergrande? Oh, Evergrande. AMC short positions are collateralized by Evergrande. I mean, if it had been some other Chinese company, if it had been some other, major international entity that was going through financial hardship, would AMC have been tied to that too? Like, where's the evidence? Where's the proof? You can't just take something that's happening out there and loosely tie it to this and never show any evidence. It's the same thing that happened with this executive order with the Chinese military companies. But, better not speak too soon, though, because as Boss Blunts wants us to know, it's Monday now it's going to happen. I mean, you can't make this shit up, but they do. How do they do that? It's crazy.
Now, like, the ramifications, I mean, it's going to spill over to Europe, and then Europe is going to come over to us. People are caught into this. There's banks that are caught into this. The way where people are invested over, now she's smacking up her legs there. You can't make this up. But here's the thing.
Exactly, you can't.
You have a situation where, people invested in that bond. That bond is dead. But the people invested in that bond, they use that bond as collateral in order to do other stuff with money. And you motherfuckers think that I'm joking when I'm around motherfuckers with balloons and all kinds of stuff. But anyway, it gets to the point where the ramifications of Evergrande, nobody really knows it yet. Like, this ain't subprime mortgages. I'm just telling you, this ain't that. Evergrande was huge. All the companies tied into it. All the money that was promised. All the money that just poof disappeared. I mean, what are they gonna do? This is gonna trigger like some weird shit. Like, could there be margin calls? Yeah, if they can't raise up the liquidity fast enough to cover themselves on this. At the end of the day, keep an eye out, because you never know. Crazy people got strength. So my thing is,
the only people getting screwed here are the apes.
Weird, like the park.
Like, seriously, how is that so hard to understand? I mean, you have to literally not understand the basics of these positions. But we're going to get to Big Money Chris here in a minute.
Bye, salam, salam. Anyway,
what a dick.
My thing is, since nobody really knows, all I can think about is, okay, things that are going to happen. And the actions that I see that are going to happen is, oh shit, phone calls are going to be made, money's going to have to be put up. That means people are going to sell things off, and possibly motherfuckers above us. Okay.
Sell things off? Okay. They.
Look at these motherfuckers. They got the right idea. But, hey, I like hanging out with the wild motherfuckers. Alrighty, let's move on. If tomorrow begins the process of fucking people feeling tight because nobody wants to give up money and motherfuckers gonna have to pay up money because they borrow money against that type of paper, look, you're probably gonna see AMC start to do some massive dips just because people on top, they might be holding some bad paper. And
oh, you don't say.
Don't freak out. This is how it is. That's why I tell people, don't buy stocks to the point where it's hurting your life.
Oh, you now you say that.
Because there are people that say, I just gotta get 20 more. I'm like, chill out. If you got your position, that's it. Make your money and do other things after.
See,
that.
that's the problem. That's the groundwork that these guys set last year. That's the problem. You can't just say that now. You can't say that now. I was watching a video by the creative investor earlier, and we should watch it because it's so bad. It's so bad. He literally says, everybody is against you. Everybody wants you to fail. The government, hedge funds, Wall Street institutions, the SEC, everybody is against you. That's why you're not winning right now. And it's like, I challenge anybody to find any teacher, any mentor, any professional that would ever say anything like that. And not only are you spreading misinformation, you're disempowering people by telling them that everybody's against them. What in the fuck is that? It's just ridiculous.
Canceling vacations and stuff like that. Listen, you already know the play is good for a certain amount of money.
There we go. Yeah, we know that. Yeah, we know that. Don't we?
Money.
There's one of your. That's one of the assumptions that people believe the most. Those are the ones that need to be questioned the most. Period.
And the market could be made. This play, like I said, I'm in it. I know it's going to make me money, so that means obviously you decide what it's going to do for you. But this whole thing happening now, I think it's about 2 months too soon, and that's what's catching everybody by surprise. But I don't know. You people chime in on it, because from my side, I'm just thinking to myself, tomorrow morning, when the motherfuckers in this city and in London and in Germany, all over the place, start realizing that one of the largest companies in the world just went bye-bye, and all the paper
It didn't go bye-bye, though. Like, that's misinformation. Nothing really fundamentally changed recently with this. They lost another credit rating. The stock's actually been trading higher recently. Anyway, yeah, but it's like these things just get in their heads and they latch onto them, and it goes from whatever it actually is to something that's way overblown. Evergrande credit rating by Fitch got removed. Okay, well, if you look that up, Evergrande default, they've been talking about that for months. People have said they were in default 3, 4, 5 months ago. And they previously lost other credit ratings. And now it's to the point where Lou's like, yeah, Evergrande is bye-bye. Evergrande is gone. They're done. They're dead. What? How does that follow?
To them went bye-bye, and all the fucking people that invested into it, bye-bye, and all the fucking people that loan money against that paper, bye-bye. I don't know, but
yeah, clearly you don't.
Fucking feel too special for me if I was on that side. On this side, and like I said, I hope the little D's feel the pressure, and it makes us a lot of money. But, you know, if you see a massive dip coming and stuff like that, don't kill yourself, because if you're doing this with your last pennies, that's how people get crazy and emotional. And, you know, chill, motherfuckers. It looks like we're wrapping.
Oh, is that why you put out that emotional piece of crap earlier with the old little old lady on it?
I'll be posting up the 5 things videos, more of it.
Without this,
today.
we're all alone.
Check in with you. And now that I'm relaxing by myself, not with that crazy bitch. She's trying to move the fucking bench. I'm sitting on the bench. Then she starts chopping herself. I'm like, what the fuck is wrong with these crazy people? I'm just trying to.
That's what we're wondering.
Just trying to. It's a beautiful fucking day outside. I mean, like.
It's literally what we're wondering.
It's the reason all of us.
Okay, so he said nothing there. Let's look at Big Money Chris. No, I can't look at the camera. That would be too whatever. Gonna be one of those type of days, huh? Ugh.
Yo, Trey, this is
Big Money Chris is back. You can't see his eyes. It's so sketchy. You never see his eyes. So sketchy. Big Money Chris. Come on, give me some quality, man. You know I like that Chris doesn't do 60 frames garbage. Don't need 60 frames per second for finance videos. It should be illegal. It should be illegal. Okay. I'm trying to set myself up for success here with the buffering. When high-speed internet. All right.
Yo, Trey, this is Big Money Chris here. I just want to say your last video, man, that was tight. It's like you use the same music we see on TV, you use the same editing we see on TV, you use the same video footage we see on TV. It's almost like you're working. Wait. Oh. Okay. Dude, man, did you sell out? I want you to tell me the truth, man. I want you to tell me the truth. Hey everyone, welcome back to the channel. So it looks like Trey Collins, or also known as Trey Trades, has completely sold out to mainstream media, and I'm not kidding. In a most recent video that he made, it's professionally produced, and he clearly didn't make it, he clearly didn't write it, and he basically looks like
Which one is he talking about
now? There's no other way around it, no other way to say it. Also, too, if you're new here, my name is Chris, a professor for about 10 years, and this is all to help you grow your account and grow your mind. So a lot of people have questions about me being a professor. Yeah, I was a professor. I taught business, international relations. I taught advertising. I taught media.
Cool.
I taught communication. I also teach film. I worked in the industry, so
awesome.
I know how to produce things. I know how much time it takes to produce stuff. I make videos every single day. I've made movies, etc. Like I know. And one of the things too, when you talk about someone's work, this is something that I'm really good at, and any professor can do, and I know you at home can do it as well, is you can kind of track the progress of someone, right? You just familiar with their work. Like I know how Trey sounds in his videos. I know how he talks. I know he makes fart jokes. I know he likes to swear. I know he likes to cry. Like I just know who the person is. And you know, when
he loves crying.
That he most recently put out, it is so clear that that is not his voice. He didn't write the script. He didn't produce these things, and he's basically a voice actor now. And it's a bit of a problem because, you know, I have no problem with people getting a job. I got no problem with that, right? If you want to get a job, fine. Because he just got out of the military and now he can get a job and he can work a job for mainstream media, fine. But, you know, the issue is that this is, you know, essentially goes counter to all the stuff he's been telling you guys. And this is why I've been telling you and warning you about these AMC people. They're basically all lying and you know, frauds and basically, you know, misleading you this whole time. Like simple example is, you know, both Trey Trades and the Matt Kohrs guy, they both said, hey, we're millionaires because we sold AMC stock, when in fact we told everyone else to just buy and hold and then essentially lose all of their money. I mean, you know, it's true.
Boom.
I'm just keeping it real with you guys, but I didn't honestly, I didn't think Trey.
Boy, they don't like me. They don't like me playing this video. They do not like it. Okay.
It would just be a complete sellout. I just wasn't something I'd say. I just figured he would go into, you know, a video game channel, play Call of Duty, and become a YouTuber Call of Duty guy. That's just sort of the kind of person he is, which is fine. Go for it. But it just seems really counter to be essentially railing on mainstream media and saying, you know, don't trust this stuff and stuff. And now work for them, basically. He'll probably work for them once a week and promote stories that they want him to say.
It was about a year ago that he was on there the first time.
And it's just a problem. I mean, now we have essentially put out a story saying that crypto's dangerous, crypto's bad. And it'll be really, really ironic if the next story comes out and said, you know, meme stocks are bad, meme stocks are terrible, you'll lose all your money. And you'll know for sure 100% that he was bought off by the mainstream media. The one thing that I also have a problem with is, as well is when people are essentially doing 30-second sponsorship spots. Now, full disclosure, I get offered to do this kind of stuff all the time. And there's, this is part of YouTube. We all have
I don't get offered to do that.
It's part of the game.
I don't get offered
but there's
to
some lines
promote
that I don't
anything.
One,
come on, you
for
should
me,
ask. Somebody's got to want Scotty to promote their shit.
That is something I think is really important to YouTube. Is the sincere, honest people, I wish to think, do really, really well. That's why you tune into YouTube, because you want sort of like, what is a regular person's opinion? However, as it turns out, someone like a Trey Collins, Trey Trades guy, they can be
Panko
bought.
native.
It seems that almost anyone
here.
has a price. And it's unfortunate, but it is what it is.
All right.
Also, too, full disclosure.
Good to have you, sir.
Anyone who knows me, and this is something, people always ask me, why did I go be a professor? Why did I move to Hollywood, et cetera? This is something I talk with my students all the time.
Move to Hollywood.
If I wanted success, right? And this is for anyone. It depends how you define success, and it really is a big depends. You can go and you can make music videos. You can go and you can make essentially naughty movies. You can go and you can make certain kind of things if you're willing to sacrifice your artistic integrity and who you are as a person, right? I'll give you a simple example. This is a really, really funny one. If you want to work in media and you want a for sure job, I'm telling you how it is, for sure job, you go make Christian movies. Reals. Do you know why? Because frankly, no one wants to work in Christian movies. They just don't want to. Most people don't want to do that. Now, if that's your thing and you want to do it, go for it. But the reality is, like, pretty much no one who's in the industry is like, oh my God, my dream is to make Christian movies. And it's kind of like, this sort of thing with Trey. It's just, it's sad to see. Not only has he been lying to you for a year about the squeeze, right? The stock's gone from 72, now it's at $12. So basically, it's heading to zero. You guys know it.
Yep.
And now he's working with mainstream media, producing these kind of things and basically being a voice actor. Now, I'd love to hear in the comments if you think, oh my God, no, Chris, you are so wrong. He did this all by himself. Trey is so smart. I'd love to hear you say that. Because this is, like I said, as a professor, kind of you track the progress of your students.
This is the most serious big money Chris video he's done. Wow.
And people will make progress in the things that they do, right? But
better off being the heel of the AMC play.
You don't go from like basically zero production value to essentially making professionally produced videos that look like something you'd see on NBC Dateline. And I'm very real. They use the same exact
God.
music.
It's already buffered so much too. What a piece of shit.
Music, the same type of graphic editing, all these things. No one goes from zero to that.
Yeah, it'd be like if tomorrow I did a live stream and everything worked perfectly. You would know that I was paid off. Jesus. Embarrassing. Well, anyway. It's going to be one of those type of days, it looks like. Just, volatility. Well, I mean, it's only down to a little bit. Natural gas is on the march up over 3%, almost approaching 3.5%. Yay. Okay. Gonna behave now.
The other thing too, which is really interesting, my wife pointed out, because my wife is a Korean national. I lived in Korea as well, so we both speak Korean. He uses Korean sources in the video that there's no way he'd have access to, or no way he would actually understand. There's just no way. But you're gonna say, no, Chris, Trey's so smart, he can learn Korean in one day. Right. And this is something I just want you guys to be aware of, please. As a retail investor, and this is anyone out there, do your research. Google things, right? Learn about people. Something like Trey, I was just generally curious.
And
like
stay off Reddit.
Google him on LinkedIn.
Christ's
He doesn't
sake.
have a LinkedIn. Like, he doesn't. And this is just, it's frustrating because, this whole ape movement, it was led by a few people. Like, one is the homeless guy in the park, right? The Lou versus Wall Street guy. That guy is a convicted fraud. He has 3 counts of fraud: mail fraud, wire fraud, bank fraud. He's the most popular one right now, but people still watch this guy who is a convicted fraud. And now you have this guy Trey, who's been going all along, the mainstream media is lying to you, et cetera, et cetera. And now he's going to be working with them once a week to produce content for them with their voice, not writing their stuff.
Is he going to show the video?
You know, these
Does anybody know which video he's talking about?
You can't trust what they say, right? And it's funny because, you know, people who are into AMC, they always say, oh, Chris, you're lying to me and blah, blah, blah. Here's the reality, right? This Trey guy has been lying to you for a year, telling your stocks can go to the moon. It's at $12. I've been warning you guys, trying to save your money for you, right? And the stock keeps going down, and I've been correct on what the price is doing. And so ask yourself, just look at your bank account. Who's right? The person that tells you it's going to go to $1 million, or the person who tells you it's going to go down and you should jump ship and save your cash? But I get it. If you think that watching the stock and watching all your money go to zero is a political statement, as Trey tries to sell you, oh, yes, you're part of this movement. Oh, yes, you're going to change the system. Just hold on your stock, watch it go to zero, and you're going to make big change. I mean, it's leading everyone to doom. And, you know, it's sad because you're you know, this guy, he's taking advantage of people new to the market. He's selling hopium.
I love that clip.
It's just basically snake oil. And, you know, I honestly didn't necessarily think he would sell out in this way. It's not something like I said, I just always imagined like this would be the kind of guy, he'll take his $1 million or whatever he made on AMC. He'll spend it on, you know, new toys and stuff like that. And he'll just do a video game YouTube channel and live off the government. If you don't know, it's really interesting. He got out of the military. I think he's 100%, they rated him 100% disabled. And I remember seeing on his Twitter, a lot of people in the military,
snake oil
as well, were really, really complaining on his Twitter, like kind of mean stuff. I don't want to repeat this stuff because this is a kid's show. But I just want you to point out that
kid's show. Oh my God. Oh my God. Come on. What the hell?
You know,
oh, Jesus. Thinkorswim really eats up the memory. It really kind of does. It's pretty ridiculous. It's a memory hog.
Use your common sense here, please. And I'm keeping it real with you guys. You know, I have to be mean sometimes because sometimes it's like, that's the only way you guys will listen. Your money's going to go to zero, and the guy leading you is a total fraud. There's no other way around it. And now he's working with mainstream media. So you can watch the stuff for yourself. I put some screenshots on there. It is clearly not made by him. He's working with 4 other people, with the voice of other people now. And it's only going to get worse. The funny thing is he doesn't even really talk about the quote movement anymore that much, because he knows it's the truth. And, you know, one of the things that I've always told people about these kind of things in life, right? Everyone has different goals in life, but everything has a price. And one of the things that I tell you guys, and I emphasize over and over again, I'm pushing 50, but you would never guess that. You know why? Because I have a clean conscience. If you lie, cheat, and steal and do all these things to other people and don't care about other people at all, and only care about your own self and your own pocketbook, and you sell out to corporate America or whatever you're selling yourself out to, it grows a lot of gray hairs because deep down you know what you're doing is wrong, but you're making a lot of money. And
we talked about that too.
For me, I just don't want to make that trade-off. I prefer telling people the
doesn't want to make that trade-off. I see that, what he did there.
That's just me. So, you know, I try to make videos and I show you guys the real numbers of AMC. And it's weird. You'll read these weird comments of stuff and I'm just like, do people really believe the words that they're saying, or are they just purposely lying? Simple example. Simple example. AMC has $5 billion in debt. Not just making up numbers out of thin air. It's $5 billion in debt, and they're losing about $1 billion a year. That alone is irrefutable. It's not like I can just make this stuff up, right? They come out with their earnings.
You're just a hater.
And it's funny, you read the comments, and it makes me realize that people don't understand what earnings reports are, okay? So, you know, these kind of things, and this is sort of people like Trey, they really misrepresent stuff. So this is how earnings report goes. Wall Street estimates what's a company going to make, okay? And they say, oh, okay, we think you're going to lose, you know, we'll just say 400.
Okay, I can't stand it anymore. I can't stand it. Let's see if we can find that video that he's talking about. So there's that video we watched a little of. Why is it not bringing me the actual channel? It's weird. I'd like to... Is it this? Is it that one? Is that the one? Manny, I guess it is. Oh, wow. Yeah, I see what he means with the clips and stuff. Do you guys want to see more of these types of videos every Saturday? Oh, look at this. This is fantastic content. Would love to see more of these short documentaries. All right.
The crypto world is captivated by the Terra story. That is for sure.
Kwon Do-hyung, commonly known as Do Kwon, is the creator of Terra and Luna, the Terra Network token. Recently, we have seen Luna, Terra, and the 2.0 version of these cryptocurrencies have been absolutely slaughtered, and many are claiming it was a rug pull. But let's rewind. How did Do Kwon get here? Kwon completed high school
at Taiwan Foreign Language High School and studied computer science at
yeah, he never
Stanford
does stuff
University,
like that.
graduating in 2015.
This is
After,
totally
he
different.
worked for
Look,
Apple
that's
and Microsoft
profession.
each for 3 months before returning to
Okay.
South Korea in late 2015.
From there, he quickly became the founder and CEO of Onfi Incorporated from January 2016 to October of 2017. Onfi
I don't even know if I've ever heard a
peer-to-peer
Trey video with
connectivity
voiceover like
solutions
this either.
using mesh networks. After Onfi seemed to cease operation,
that's
Do Kwon
voiceover
set his
that's
sights
dubbed
on
in.
blockchain and Web3.
Not done
In January
live,
of
basically.
2018, Terraform Labs was incorporated with Do Kwon presiding as the founder and CEO till this day where we are now. Thousands of people's accounts absolutely wiped out, and something that shouldn't be possible for a stablecoin. So how could this happen?
It's a cycle of life. You begin from nothing and go back to nothing.
I'm not even
That's
really
exactly
even listening to
what
listening to the content
Terra's
itself.
gonna be the decentralized money standard across
I'm
the
just
entire
noticing the
blockchain,
production of the
across
video
all
and
blockchains.
all of that
And I'm
stuff.
excited for Terraform
Because I know
Labs to
about this story.
contribute
We all know about
a
this
significant
story by
portion
now,
of
right?
our
I mean,
vision, but eventually to go back to nothing. Right. Yeah. Excited.
Well, there's something I didn't tell you. Former Terra employees have claimed that Kwon was also the founder of another failed stablecoin project that was dubbed Basis Cash.
And now we're reporting it's coming to light that, Do Kwon, this was sort of his first hack at the algorithmic stablecoin, a decentralized stablecoin.
Basis was originally modeled off of a previous project.
this is like
The
a
project was forced to shut down
CoffeeZilla wannabe
amid
type
regulatory
video.
Concerns. This is not confirmed.
CoffeeZilla already
but
covered
there
this
seems to be an
anyway. He already
interesting
went
link
over all this
between
stuff.
Kwon and the supposed Rick Sanchez
And he did
that
it,
was
like,
involved in Basis Cash.
in a personable
However,
video where you-
this was claimed to be a test by the
you know,
former
he's-
employee who said,
he's
quote,
there
"Kwon
telling the
viewed
narrative."
Basis Cash as a pilot project for testing out the theory behind algorithmic stablecoins. Now we get back to Terra and Luna again. Bear with me here if you don't understand crypto. I will make this quick and painless. Terra USD is an algorithmic stablecoin that is meant to maintain a 1-to-1 peg with the US dollar. However, UST isn't backed by the US dollar, as it keeps its peg via a burn and mint equilibrium. There is one token that is stable,
Equilibrium.
UST or Terra, while the other token,
Like all
Luna,
these-
is meant to capture
all these
volatility.
transitions and stuff, there's no way he
Anchor
did that.
Protocol is offering a 20% interest rate on UST wallets in their application. Bloomberg states Anchor's current rate of 19.45% is an ambitious
Extremely
promise,
high production
even for
value.
an industry known for its explosive growth and minting
All this,
overnight
like,
billions.
that right there
Some
even.
DeFi
This segment right here, this little clip, this
current
black and
rate
white
of
clip,
19.45% is an ambitious
you've got this
promise.
motion,
Even for an industry
and then you got, like, all the transitions are tight. They're all varied. And then on these black and white clips, notice it has the
19.45%
film
is an ambitious
effect on
promise,
it.
even for an industry known for its
It has the
explosive
film-
growth
moving film
and minting
strip
overnight
effect.
billionaires. Some DeFi projects used to offer even higher rates just a year or two ago during a DeFi boom, but with few remaining projects, skeptics have questioned whether the rates are sustainable. Well, easy answer, they weren't. With the high-yielding anchor system, some critics raised concerns that Quan's stablecoin model could function like a ginormous Ponzi scheme. British economist Francis Coppola and others who criticized Terra, Quan replied by calling them cockroaches and poor. To follow this up, Quan responded to a Twitter investor asking where the capital for the yield reserves of the near 20% anchor protocol came from, to which he responded, "Your mom, obviously." Then on May 9th, UST began to break its peg to the dollar, to which shortly after
this background
UST
image
plunged
here,
to 10
background
cents,
video.
while Luna fell to virtually zero from a $119.51 high. This alone wiped out $45 billion in a mere week. You must be wondering, this must be pretty obvious by now. Well, in 2021,
oh yeah,
the
it's
SEC
obvious, Trey.
subpoenaed Terraform Labs due to virtually mirroring listed stocks on the blockchain. Quan instead sued the SEC back, but then was ultimately forced
Even the
to
length of it
oblige to
is
the
atypical for Trey.
after a year in
Under
February
7 minutes.
2022 by
Like
US
that's
court judge
pro
in
level
Manhattan.
length.
So
That's what the pros
I can't
do.
Comment on
Less than 10 minutes, less than 8 minutes.
lawsuits and investigations, but I just want to iterate that we're happy to.
This has got a vignette effect on it too.
Across the world to educate them on the merits and
around the
potential
edges
problems of cryptocurrency, and I think Terraform Labs shares my vision for that.
After this, Quan filed to dissolve the Korean entity on May 4th, 2022. On the 17th day of May, the Korean parliament
Right, this is the stuff
considered
like
a hearing to,
how,
on the 17th day of May, Korean entity.
how does he like? I don't know. It's weird.
On May 4th,
Is that Trey's handwriting? Kind of looks like Trey's handwriting, a little bit, but from his whiteboard that we've seen him do a lot. But there's no way. Like how somebody obviously told him that. There's no way he can.
2022. On the 17th day of May, the Korean parliament and authorities considered a hearing discussing Terraform Labs and its founder, citing lack of regulatory framework. On May 18th, it was found that Terraform founders Quan and Shin have been asked to pay additional taxes worth $100 million in December of 2021. However, they reportedly refused to pay on grounds that they are not a Korean entity. This brings us to today. With nearly 300,000 Korean Luna investors taken down in the crash, there was an official announcement that they will be filing a class action lawsuit against Quan via a domestic firm in Korea. With this being known, Quan decided to revive Terra with Luna 2 on May 28th, which has experienced volatility from the $30 high to a $4.01 low in its short time trading. This is being called Terra 2.0. And the question is, will investors fall for this again? History would, unfortunately, suggest...
There's such a dark irony in this, too.
Drop a like if you want these types of videos every Saturday. Thanks for tuning in.
He never does
Take it
that.
easy.
Does he do that either?
Peace.
Like subscribed, all that stuff? And
videos every Saturday. Thanks for tuning in. Take it easy. Peace.
even his sign-off is different. Take it easy. What happened to much love? Light taps. Wow. Oh my God. I mean, I remember I think it was last year when he started. He had a couple videos where he literally did a paid a promotional segment for a game, some mobile game or something. That didn't last too long. I wonder if this will. But wow. And then, this is fantastic content. It sucks for people that fell for the nonsense. You see, this is that dark irony that I'm talking about here. When there are people pointing out the fatal flaws of these schemes, and the creator's response is, "LOL, you're dumb. You need to keep a mile away from it." This Quan dude is high in his own hubris and doesn't care that he's ruining lives. Let me revise this. It sucks that people fell for this Moass nonsense. When there are people pointing out the fatal flaws of this scheme, and the influencers' responses are basically, just buy and hold. You need to keep a mile away from it. These AMC grifters are high in their own hubris, and they don't care that they're ruining lives. Wow, is this so, just darkly ironic. I honestly thought this is from one of the documentary channels I follow. This is a big step up in video and content quality. You did a great job of production on this video. Wow, this was some quality content. Oh my God. Like, people actually think that he edited that? What a great idea. Love this. And yes, you have my vote for these type of videos every Saturday. Trey's like, yes, they like it. I'm going to get paid. There's got to be somebody that called it out, though. They're going to be towards the bottom. Well, god damn, that was an awesome video. Whew. This was an exultantly made video. Cold Fusion covered this story at length already, Trey. Well, fuck you. You're a solid narrator and filmmaker. Trey, the filmmaker. Damn it, Trey, who knew you had the perfect radio voice? Dude, there's a Citadel connection to Luna's downfall involving 10,000 Bitcoin loaned from Gemini. Yeah, that was debunked a long time ago, my friends. Can't wait for that one Saturday when you will make this kind of video of Citadel. How about that one Saturday where you make this kind of video about AMC? How about that? I honestly never comment, but I love these kinds of videos. So he's got people who never comment saying that they love it. God. Make some AMC videos in this style, please. Trey, please up your thumbnail game. You could be getting more views. I've recently learned how to make better thumbnails, so hit me up on Twitter if you need help. Please make one about people losing when they bought AMC for $30 to $70. They are still waiting for May to June squeeze 2021. Mr. Strange Voice. Kind of ironic, people talking bad about Luna and investing now while they are in AMC laughing. Really ironic. BlackRock and Citadel were involved as well. Does he have a price on? Okay, he's talking about Quan. God. So this guy is basically Jin Yang from Silicon Valley. God. Yo, Trey, look up Chris Norland. He's shitting on you for this video, LOL. Well. You're no CoffeeZilla. Damn. Ouch. Trey the PI. AMC, LOL. That it? That's it. That's it. So there's a couple. There were a couple. I knew there would be a couple. Another good way to do it is to do this. Sort it by new. Comments. Probably have to refresh it. But anyway, yeah, wow. That was pretty scary. Thinking like, what do I have open that's not supposed to be open? Why is it lagging so much? I don't have an answer to that. I do not. Oh God. Well, Fudzulo. So I started making a video last night about this, and I it was so dumb. It was so dumb that I had to stop. I was just like, you know what? I can't do this. This is so stupid. So stupid. So these leaks have been out since one of them came out last year. One of them came out in 2017. One of them came out in 2016. They've been out for a long time. So the notion that somebody on 4chan would post this and Al from Boston would say, oh my God, this guy on 4chan, he leaked this exclusive information. No, he didn't. This shit has been out there. That's the first thing. Second thing, let's go to the offshore leaks database and search for Citadel and just make the assumption that all of these entities that are called Citadel this, Citadel that, are related to Ken Griffin's Citadel. I mean, that is just asinine. It's an asinine assumption. And beyond that, if you go to some of these entities, a lot of them are closed. A lot of them are no longer active. A lot of them are, have been dead for years. One of them was founded in 1972 and was dissolved in 1975. And it's on this list. So this is garbage. And they have a disclaimer right at the bottom. You can't really read it, but it says there are legitimate uses for offshore companies and trusts. The inclusion of a person or entity in this leaks database is not intended to suggest or imply that they have engaged in illegal or improper conduct. Many people and entities have the same name or similar names. We suggest you confirm the identity of any individuals or entities included in this database based on addresses or other identifiable information. So that's basically saying, like, don't just assume, don't make assumptions based off something that you see here. Maybe.
All right, everybody, we got a ton of big stuff to cover here
Maybe
today.
Tom goes into depth.
We talked about on Friday night how there was a big leak on 4chan where a bunch of offshore
4chan
accounts and shell companies from Citadel actually got online, and this opened the doors for people to do their own research, look into this, and see what was going on. Now, at the time I posted that video, it was only about a minute long because I didn't have time to actually go through anything yet. I've had some time to look over some of this stuff, and we're going to be taking a look at what is behind some of this information. There's a lot going on here, and there's a lot to cover here today. Now, before we cover that, I want to ask a favor. We have a guy, this is a Fox business anchor who actually has come after me a little bit after I made a tweet about him.
Good.
Now, this guy is famous for saying that AMC is possibly the worst investment of all time. I'll link this clip down below so that you can watch it if you want to. But basically, I made this tweet saying, getting ready for Charles Gaspanero, Gasparino to tweet another gym selfie after seeing this one. He's a guy who posts a lot of gym selfies and threatening tweets, and we're kind of having a little discussion here on Twitter. Now, you can keep up with it if you want to, but maybe we can tweet him and respectfully ask him to come on the show if he wants to. I really don't want anybody to berate him or make him feel like this is a attacking environment. If you want to tweet him, that'll help us out, and we can get some coverage here on the show. Let's get into this stuff though, because
I saw that super stonk tab there.
To go over here. Now I'm going to be highlighting this Twitter thread. Shout out to Professor Rizzo, Citadel, Cayman Islands.
Oh, yeah.
Now, funnily enough, this guy is followed by Adam Aron, so hopefully Adam Aron is seeing some of this stuff. But let's just dive into kind of an overview of information from these leaks. So here's another Citadel Cayman Islands SPAC, Fast Acquisition Corp, 1 million shares valued at $10 each. There's just a lot of stuff going on here. So this is the first SPAC.
That's the second time he said there's a lot of stuff going on
that I have behind this is I think that these shell companies allow Citadel to manipulate the numbers that they report. Citadel's assets under management are about 30.
We already have him saying what he thinks it is. I mean, they don't call him Fudzulo for nothing, I swear.
And the profits that they're displaying seem to be ever increasing. It seems like even in this bear market, they've had a really, really good quarter. Let's go back to where we were. Even in this bear market, they've had a really good quarter. It seems like they're really doing solid performance. But personally, I think that they're using these shell companies to affect the way that they have to report their performance. That's what I think. And this is actually backed up.
Oh, it's backed up, is it? Great.
By a unrelated post just a day ago where a guy does a ton of DD talking about a former Citadel client. And there's a lot of information here. I will link this below as well. But basically the TLDR of this information is recorded call with former Citadel client reveals Citadel has been underperforming and may have been cooking the books on their finances further.
So what are you talking about? Are you talking about the hedge fund? Are you talking about the market maker? Like, what are you talking about here? Are you talking about Citadel as a whole? Like, yeah, they had record profits last year because retail investors traded more than they've ever traded before, and they generally use brokers that go to Citadel. And they make money on those trades. So, I mean, this is like the payment for order flow argument in that apes are basically responsible for this. They're responsible in no small part for Citadel's profits being what they are. It's just crazy.
Other evidence shows that Ken Griffin was desperate to hold on to his clients' funds and was ferocious
so they must be talking about the hedge fund.
Left him. So if this information here is true, it looks like we already have some substantial reason to believe that there has been some cooking of the books for Citadel. Now, the more we look at this information from let's see all this information from
let me just click around at different tabs and confuse you.
This is starting to become more and more possible and realistic sounding. So here's one SPAC. This is a great way for them to funnel and even launder money. Now, I'm not saying they're doing that, but this is a great way for them to do that if they wanted to. This is a Fast Acquisition Corp, has been underwritten by Citigroup and UNS Bank, $200 million IPO at $10 and financed by Citadel Cayman Island shell companies. Here's some information there if you want to read it. So
great.
This is just more craziness that is happening here. It looks like a lot.
I didn't see Citadel in the... Where's Citadel? Odeon Capital Group, LLC. That's underlined. Fast Acquisition, Citigroup, UBS. By the way, in the tweet it says Fast Acquisition Corp has been underwritten by Citigroup and UNS Banks. UNS Bank, well, it says UBS here. So that's the level of detail that these people are taking.
This is just more
Jesus.
craziness that is happening here. It looks like a lot of the money is being moved around in the Cayman Islands and offshore with these shell companies, and this would enable Citadel to really do whatever they wanted as far as reporting, because if they can move money around so untransparently, this is a great opportunity for them to misreport numbers.
You mean, Tom, you mean with opaque transparency, right? Yeah.
Receipts for days, Citadel, Kensington Global Strategies Fund Ltd, $14 billion. So apparently they have...
yeah, that has Citadel Kensington Global Strategies Fund. I looked into that one. It has... There's absolutely zero link. And I believe that's one that was closed down, too.
$1 billion transferred to the Cayman Islands. Another pooled investment funds, $14 billion transferred to Cayman Islands. Kenneth Griffin was a greedy MF. Let's take a look at this. $14 billion. Again, you can pause and read this. I won't pause and read everything here, but this is...
Okay. Luxembourg, Bermuda.
An SEC report. This is something that is not some type of tinfoil hat conspiracy theorist. This is literally just $14 billion moving offshore. Why are they moving that money offshore?
That's not necessarily illegal.
There's a lot of reasons for this, possibly, but I would not be surprised if this has something to do with AMC and GameStop and some
oh my God.
Reports Citadel.
I wouldn't be surprised if it has something to do with AMC and GameStop. Oh my God.
Global Fixed Income Master Fund. What the fuck? $117 billion. So again, apparently they only have $35 billion assets under management. But in this Cayman Island private fund, we're looking at possibly $117 billion. This is insane. So
they don't understand.
As you can see, just read the highlighter part.
They don't understand. They hear Cayman, they hear offshore accounts, and they just, you know, they have a field. I mean, if you saw the Al versus Boston video about it, I mean, he was like a fucking kid in a candy store. He sounded so fucking ignorant about all of it. It's just, it's ridiculous. I mean, he is just terrible. It's
Feel
just
free
terrible.
to pause and read if you want to. Says here, current gross asset value of the private fund, $117 billion in this fund. And this is just one fund of many. I mean, look at all of these funds.
Yeah, look at all these funds that have the name Citadel. Wow.
That are all under this name here. That's insane. Let's keep looking at this. So feel free to pause and read once again. All right, let's take a look at this one. Receipts, Citadel Multi-Strategy Equities, $66 billion. So where is all this money coming from, and what are they doing with this money? This is scary stuff, and in part it's so scary because we don't really know what this is being used for. We know that all of this money is floating around
clearly
offshore,
it's being used
but we don't
to short AMC, okay? Clearly it's used as collateral to borrow shares on AMC and short it into the ground because they are literally against you. Everybody's against you, but you'll win in the end. But you know you will prevail.
We don't
but
really understand what
you.
is going on here and what this could be being used for.
Then maybe you shouldn't be hyping it then, okay? If you don't understand what it is or what it's being used for, then why would you assume anything about it? Unless you're an uneducated fool. Okay? You're an uneducated fool. A child. A fucking child would do that.
The SEC, Cayman Island Monetary Authority, agreed to MOU in 2012, Mutual Agreement on Monitoring and Monopolizing Sensitive Info. Check this thread. All right, shall I keep posting? Get your popcorn. 2.24
Get your
million
popcorn.
shares. Ken G continues to launder billions, if not trillions, out of the IRS. Let's take a look at this. So this looks like another shell company of some sort, some shares. I think we actually took a look at this already. This particular company.
Oh, we already looked at that one. Sorry.
Citadel's trove of Cayman Island shell companies, billions of dollars out offshore and out of pocket of the IRS. So this is likely being used to avoid taxation. But I think that there's
looking at here?
A high likelihood that this is used to manipulate the market as well. if there's, you know, possibly hundreds of billions of dollars of assets that aren't being reported here, these are assets that can be used to influence selling pressure, that can be used to manipulate the markets, that can be used to do any variety of things here.
This is so ignorant.
Just
oh my
a wild,
God.
wild situation here. And look at all this money. Look at all these accounts. Look at these are the account values. Huge dollar figures here. And again, this is all stuff that you...
on most of these entries, it says that the information is accurate as of 2016. So, you know...
You can check out for yourself.
I don't know what he's looking at here.
Take my word for it. You can take a look at this.
That's automatically a red flag for me. You're not going to let us. You're not going to let us see the context of it. Okay,
check it out for yourself.
Great.
Let's just wait till this video gets done. I think all of this information is available on this website here, which I will link below. Bottom line here, this is some insanity, and it's one of those things that we're just not sure about all that's going on yet. As much as I want to have all the answers, what all of this stuff means, what all of this money is being used for, the information, all of that behind it, we're kind of just scratching the surface right now. And that's hopeful in one way because we may be able to uncover even more stuff as these next few days unfold. But it's also unfortunate that we don't have all the answers yet. It's one of those things we're in the dark.
That's what they are, little idiots.
This situation. But it's one of those things that I'm also not going to be willing to forget about anytime soon. I'm going to be continuing to keep an eye on this.
I honestly think that they have scratched the surface of defamation. I think that they have. Now, I don't think that at this point it's affecting Ken Griffin and his ability to just steamroll them. But if it did in any way, I think that you probably would. But it's just a bad situation. Like, it's just a really bad situation because this, again, creates more false hope. Even though he's admitting, hey, I don't know what this is. I don't know what they're using it for. But, boy, if they wanted to do something nefarious, they could. This is how one way they could do it. Well, how do you know that, Tom? How do you know that? We spend so much time hyping it up and showing Ken Griffin's name and showing these large numbers that you totally disregard any actual link, any allegations. What's the allegation? What's the allegation here? I mean, I never thought I would be, in a way, but I'm not really. But I never thought I would be having to defend something like offshore accounts. But I mean, you can't just make these assumptions. That is literally ignorant. And then turn around and hype it and put out a video saying, "Oh, I don't know what it is actually, but this is and I'm not saying that they're doing anything bad, but this is a lot of money. Where'd it come from? What are they using it for? I mean, they could use it for short positions. I mean, come on, dude."
My best to research what I can. I'm not the guy to research though fully. I'm not as good at doing the hardcore research as some of these other guys are on Twitter. So feel free to tweet me if you find any more stuff that you think I should cover, because I'm all ears for this and I want to do the best job I can to cover this information. So
then
thanks for watching.
This video.
Again, if you want to possibly get Charles Gasparino,
he can't even say his name properly.
This is the guy.
What is it with these guys picking fights with people? They can't even pronounce their names properly. What the fuck?
The worst trade of all time. Feel free to tweet at him respectfully. Tell him what we're about here on the channel. We're not about the name calling. We're not trying to, hurt anybody, make them feel terrible. I'll have a little bit of fun, like I kept asking him for a gym selfie because I do think that's a little bit funny.
I agree, Model 3. I think he's doing the right thing.
Respectfully, if you want to ask him, feel free to do so. Feel free to
because he knows that this is noise. He knows that this is complete noise. It doesn't matter at all. It's ignorant. It's just noise. But I think nonetheless, there's a point where it does cross over into something that would be actionable, I think. But you got to see this. You got to see this creative investor video. I mean, this is some of the worst shit. Oh, by the way, Buy the Dips. That's Benji's second channel. Buy the Dips. He put out this video. Oh my God, Jordan Belfort lost his mind talking about AMC GME short squeeze. This video was from last year. It was from February 1st, 2021. This video that he's playing here, hyping, is from over a year ago, from the original GameStop run-up. But he doesn't tell you that. The video is zoomed in so that he doesn't show the market information that's probably down here, or the date. It's despicable. Really, it's a scam. Where's this creative investor nonsense? Ah, Jesus. Here it is. The truth about AMC. Here we go. It's an old video, man. Oh my God, I couldn't believe. I mean, well, I can't say that. Yeah, I feel sorry for anybody who had the idea to use the name Citadel ever for a business who's not Ken Griffin or related to Ken Griffin. And really, Ken Griffin, that was, if I have to offer any criticism of Ken Griffin, it would be, don't use the name Citadel for everything. Don't use the name Citadel for everything. It's too confusing to these people. Yeah, wow, this is a whole lot of sideways nothing here. Basically flat. Oil's up just under 1.5%. Natural gas is up just under 3.5%. Yippee. And yeah, I mean, I think his channel. Yeah, I agree with that. It's just complete misinformation. But then again, so is this. I mean, they need to go in and do a mass delete of these channels. It's crazy. But listen to this. This is so bad.
It's time to talk about the truth of AMC stock, and some people might like this, some people might not like this, but no matter what side of the boat you are on, there is an undeniable truth here, and that's what I want to express to you guys here in this video, as well as go over some things that you guys need to know, like the ortex data, like the stock O tracker data, so on and so forth. So we're gonna get into this video. Thank you guys for tuning in here on this Saturday. It is never a bad time to get your financial education on, and you guys are already winning
financial education. And listen to this fucking patronizing. Listen to this patronizing and gaslighting right here. It's great.
It is never a bad time to get your financial education on, and you guys are already winning as far as in the personal finance realm, just by growing your education and being actively invested in the markets. All bad things do eventually pass, just like this downturn in AMC stock. So let's get into it. If you guys have not got your free stocks already with Webull,
you guys are already ahead of the curve by, focusing on your education. What a narcissistic piece of shit.
Invested in the markets. All bad things do eventually pass, just like
it's not even the worst of it yet. Oh my God. Just wait.
Downturn in AMC stock. So let's get into it. If you guys have not got your free stocks already with Webull, Moomoo, and Public, down below in the description.
Webull, Moomoo, and Public. He's got 3 brokerages that he's got promotional deals with. I mean, seriously, Jesus.
This video, make sure you guys take advantage of that while it does last. And if you guys want to come trade with me live in real time, every time I make a trade or breaking news comes out, we like to post those things down there as well. Link in the pinned comment.
Well, if you wait until somebody else posts it in a Discord, you're going to be behind the curve every time. You're never going to, you're going to get caught 100% of the time. Well, maybe not 100%. 90% of the time. You are late. Hell, if you see it on Google News or the mainstream media and think you're going to trade off of it, you're probably not going to get in. You're going to get, you're going to get caught with the herd. But anyway, whatever.
For that. So what is the truth here? Well, the truth of AMC stock is we used to be much higher. Right? In June 2021, we rallied to $72.62 per share at the peak. We did most of this move in one day. We rallied about 95.22% from $35.59 per share was the low, all the way up to that high that I just previously mentioned.
Actually, that wasn't the high. that wasn't the high. That was the regular trading hours high, but went higher in the aftermarket, pre-market. Anyway.
And then we traded sideways. And then we started to trade slightly ever to the downside as the markets became really risk off.
Is he on a log chart? Doesn't look right to me. It looks way more sideways than it should. I mean, he's got the scale all jacked up.
We have fallen to these lows that we currently sit at, around $12.50 per share. That's the truth. That's the truth of the matter. The truth of the matter is you have had some people walk away from the stock. You've had some people walk away from the markets. That's also the truth. What else is the truth is it seems like we cannot hold a major rally. We can get major rallies. We can see 200% rallies going from $12 to $35, but we can't seem to continue on that rally. Now, why?
Okay, so I heard that and I'm thinking, all right, I actually agree with that. None of the rallies hold. So I'm thinking, oh, he's going to talk about how people bought in on this first move up. He's going to talk about how zero people bought to the left of the run up over here. Nobody bought at these price levels. These price levels were never seen, never. So anything from this point on, above this point, actually above this point here, to the left, before the run up, anything above that price is from June 2nd or later. And a lot of it was from those days right around there. And he's going to talk about how now, unlike before, there is this major overhead supply that exists up here. All these bag holders, all these people high, they're all sitting up here waiting for the stock to pop up so they can get the hell out. So when you say, why doesn't it hold a rally? Well, every time there's a rally, it gets sold off because people are trying to get the fuck out of this thing and not lose all their money. And it's basic. This was the short squeeze. Anything after it is going to be akin to aftershocks or secondary bounces. But it's never, this is never going to go above where it was, simply because it will always be sold off. The rallies will always be sold by people who've been lied to for the last year, saying, oh, the squeeze is coming, the squeeze is coming. Well, now that inflation is through the roof, interest rates are going up, the economy is going to be probably heading into a recession, if it's not already. You bet your bottom dollar that they are going to get out whenever they can, even at a loss. So that's the simple Moass debunk. You have a major, insane, in millions and millions of shares, overhead supply. It's going to get sold off on a rally every time. But, of course, that's not where he's going to go. It's not where he's going to go with it.
Why is that? Well, the truth is the SEC, hedge funds, the goddamn president, everyone is against the retail investors. And, I got to throw the president in there because look at what they're doing to the price of gas. They could jawbone that down tomorrow, right? Everyone is basically against you guys. That's the truth. What is also the truth is that these hedge funds will stop at nothing to prove you wrong. Look at articles like this from the Motley Fool. 3 reasons to buy AMC Entertainment stock and 1 to sell. Or look at some of these other articles. 3 reasons AMC stock will remain in a flat spin even as Top Gun flies high.
Well, I just gave you one very good reason why. And I'm not a hedge fund. I'm not a hedge fund. I have nothing to do with the hedge fund.
Want to know another truth? The SEC does not want you to win. They do not want you to invest in stocks like this, where a small amount could turn into a very large amount of money. Look at the SEC's video they just posted, making fun of all retail investors, meme stock investors, quote unquote, whatever you guys want to call it. And what's the underlying truth to that as well? Is because, yes, this is a big risk to the financial system. But are you causing that risk? No, you're not causing that risk. Essentially, the hedge funds have created...
That is such a delusional argument. because it's shifting the argument, and it's addressing a problem that doesn't exist. It's gaslighting.
That risk for them, and they are in way too deep. So you gotta.
The people that are in way too deep are the apes that bought literally at $60, $70. They're the ones that are in too deep.
Have the SEC come
Common
out
sense.
and making claims like that, making videos. They put a lot of effort into that, so it's kind of comical.
Not really.
To try to steer you guys away from stocks like that, so the hedge funds can just short them into the ground. And
look,
you know,
Trey's video that we watched with all the black and white clips with the film strip effect, that is a way higher production value than any of those Investomania segments by the SEC. 100% higher production value, period. Like, it didn't really cost them that much to do that.
Divert that potentially big market risk or big liquidity event that could possibly happen. Now, here's another truth. The hedge funds continue to short the stock into the ground. The short interest continues to climb, now much higher than it even was back in June. 23.43% short interest of free float, 120.79 million shares that are sold short, cost bar minimum 3.54%, cost bar average 14.05%, cost bar maximum at almost 20%. That's the truth. 100% utilization.
Well, why don't you tell the truth about that, though? That's like literally, even 20% is not that much. It's not that much. On a $12 stock, it's not that much. We're going to look at the short interest list, too, here in a second.
Cover sitting at 3.5. Shares out on loan, 179.57 million. Actually up about 3% over the past 7 days. Free flow out on loan, up almost 3% over the past 7 days. Sitting at almost 35%. These are all the truths. What's the truth of the matter when it comes down to a short squeeze? Well, it's inevitable. It's going to happen. There's no other way around it. Do we know what day? Do we know when? Do we know what will necessarily be the main driving factor that will cause?
Wrong. 100% wrong. For the reason, I'm just going to go back to this is the best debunk for the Moass. I think you could explain this to a 12-year-old, and I think they could understand it. And they have no experience in the market. They know nothing about money or finance. They can understand this. That these people up here are sitting on a major loss. Any rally is going to be sold. There's way too many people holding bags. It's inevitable. And you see it right here. Every rally is dumped. So no, there's no reason whatsoever. There's absolutely no basis for a short squeeze at this point. There is nothing putting buying pressure on the stock. Nothing. Absolutely nothing. The only buying that there is at this point is short covering. That's all. Yeah, you can see that, oh, Scott, there were 3,200 buy orders on Friday. Oh, wow, yeah. Versus 1,000 sell orders. See, people are buying, nobody's selling. This is not that much at all. What was the total volume on Friday? Well, total volume, I don't even remember. It was, 39 million. 39 million. And the highest it's been lately, well, there was a 226 million back in the end of March. Right here. 226 million, 212 million, and then sell off. This is a lot of short covering here at the end of the first quarter. End of the first quarter, shifting positions around and whatnot, but that's the only real buying pressure at this point is short covering, period. Oops. But I want to hear what is the basis for a short squeeze? What is the basis for a short squeeze at this point?
Cause it? Absolutely not. But are we getting signs that we're on the right direction? Yes.
What?
Every time the SEC makes a video discouraging, retail investors from buying quote unquote
there's more of that gaslighting
stocks, really shows how fragile the system is right now, and shows
fragile. Okay.
just how bad this event is going to be for the overall financial system, for the hedge funds, right? We even just had the Federal Reserve, Fed Jerome Powell himself during the Fed minutes came out and said, due to the lack of supervision in commodity markets as well as equity markets, there could be systemic problems and systemic risk that we don't know about that could be connected to a rise in certain stocks or certain commodity prices that put a lot of pressure on banks as well as broker dealers, so on and so forth. So I think it's very clear that we are winning and we are on the right path to getting there.
I mean, talk about a hot take. I don't know. I think he is dumb enough to believe that. I honestly do. I think he is dumb enough to believe that shit. He believes his own bullshit. Which is a bad position to be in. Bad position to be in. Not good. Not
now,
good.
What is going to start the Moass? What is going to cause it? When is it going to happen? That truth is, I can't tell you. But we can talk about things that have affected AMC stock in the past, like the executive order, which caused the first and second.
How in the hell can he sit here and say that? How could you sit there and say that? Oh my God. Even after the last date that was hyped did nothing. He's still sitting here saying that. Wow. Holy shit.
Like events in AMC stock. What is also the truth is that essentially the whole entire market at this point knows about AMC. They know about retail stocks. So that is a lot of potential buying power that will flood.
Yeah, that's another reason why it's not going to fucking Moass, you dumbass. Because everybody thinks it will. And the market is incredibly good at closing inefficiencies. One of the things that Jordan Belfort talked about in his interviews, because I watched it again because, Benji reposted it recently. So I went ahead and watched it, and he actually issues a very stern, of course, now I had to go back to the original because Benji doesn't show that part, of course. He doesn't show the part where Jordan Belfort talks and issues a very stern warning to retail investors to say, yeah, enjoy this while you can. It's not going to last forever, and it's not likely to happen again. And that's what he says. We should go back and watch that segment. Actually, there was a segment from Sky News that's probably a little bit more palatable than the one with Tucker. I wouldn't want to put you guys or myself through that.
The stock when it does start to rally. Even your large, big-time investors, they know the possibility when retail investors get together, buy a stock, when there's a lot of FOMO, when there's a very high short interest and a lot of option activity and a lot of manipulation in general. These other hedge funds, they know this. That's why you see some very large orders going through on the option chain for AMC stock. So you are going to see a certain degree of FOMO that you have never seen before when this third time
with what
comes.
money? What money is retail going to use for this? By the way, we don't have stimulus checks. We don't have unemployment. We have $5 gas everywhere, practically. But people are going to FOMO in. Highest credit card debt in history. What, are you going to put it on a buy now, pay later plan? I mean, seriously, where's this money come from? Where's the money coming from? Doesn't make sense.
Comes around from people that have once held AMC stock. That's why I say I don't care if you buy, hold, or sell AMC, because with about a 95 to 99% probability, when AMC stock does start to move massively, right, 30, 50, 100% days, those people are going to jump back in. They're going to jump back in. Even if they don't, there's enough fuel on the fire. Even if a portion of them jumps back in, they're going to be jumping in at the peak of the FOMO. And I would imagine like everyone essentially would jump back in. That there's something crazy about, if you once owned a stock that didn't do well and then it now all of a sudden does, people tend to plow even more money in the second time around rather than even the first time.
Yeah, that's called uninformed investing. It's called top tailing, top ticking. I mean, God, I'd love to see his account. I would just love to see his account. It's got to be a shit show.
That could explain why you see a lot of those weird options coming through that are very, very far out of the money as of recently. Now, we do have the executive order, and that is the truth, that did cause the first and second rallies with AMC stock, and it.
How do you know that? Where's the proof? Oh my God. Oh my God. Shit.
It is the truth. It did go into effect on Friday. And it also is the truth, in my personal opinion, that this next upcoming week.
It's the truth, in my personal opinion. Dude, the truth is not subject to interpretation or opinion, okay? That's how I know that you're an ignorant motherfucker. You say stuff like that. It's the truth, in my opinion. I mean, how stupid. How fucking stupid.
That did cause the first and second rallies with AMC stock, and it is the
brain
truth.
Dead.
It did go into effect on Friday, and it also is the truth, in my personal opinion, that this next upcoming week will likely be very, very bullish because of it.
Yeah.
But how
many weeks have you said that and the fucking stock went down? Seriously, how many weeks did you say that and the stock went down? How many weeks have there been this year so far? You know, seriously. You have no credibility. You have no business talking about this shit. You have no business misleading people. No business. None.
100% without any chance of, failure going to go through the Moass this next upcoming week. Well, I can't sit here and tell you guys that.
Well,
that's
of course not. Of course not. You're not that stupid, though.
That's not 100% what has to happen. It's what history has showed us can happen. But really, I think the whole month of June is going to be very, very important. I've had my eyes really set on the end of summer, fall time to actually see the Moass.
Oh, now we're running the fall. Okay, fall. All right, free beer in the fall.
Long story short, what is the consensus here out of this video? It's that no matter how long it takes, no matter how long you have to wait, which is your personal opinion and choice if you want to wait, but no matter how long it takes, it's going to happen. It's inevitable when the short interest is this high.
No, it's not.
And when the activity and the eyeballs on AMC are so high. Like, for an example, AMC in Google searches, AMC stock was searched more than the word stimulus check in 2021. Just to put that
in 2021. Great. How's that relevant now? That's when all the people bought in high, my friend. That's when this overhead supply was created. When people were searching for AMC more often than they were searching for stimulus. That makes sense. He's right about that. But what he's not right about is its relevance now. That was when people had stimulus checks and they could save 20 to 30% of whatever income they were getting from whatever source. But no.
In the context of just how many people actively search AMC stock on a daily or weekly basis. Now, it's inevitable. And I know I've said that a couple times.
Yeah, you have.
When you see the shorts that continue to short the stock to these record high levels of 23.5% short interest of free float, they could easily be covering right now at a profit, but they're not doing that. And I think a lot of AMC is actually
they are
based on
they're covering every day, Denaro. They're covering every day.
Algos, right? Even this article. This is about liquidity in the U.S. stock market, February 7th. Risha Bahardi says liquidity is abysmal, is the way I would describe it. And they go on to blame that basically trading algorithms are the reason for this, right? That a lot of individual investors are not really going into riskier assets anymore. So
like meme stocks.
You have a lot of things that are working in our favor. Lower liquidity. We're going into a recession, right? Interest rates are going up. Portfolio values are down. So it's very hard on that front to actually service those margin calls. And look at all the option activity that you have on the option chain as well.
Yeah, right.
Right?
So much.
5,000 for calls that are in the money. for June 17th, 277,000 for calls that are out of the money, 118,000 puts that are in the money for June 17th. July 15th, 7,200 calls that are in the money, 339,000 calls that are out of the money, and 54,000 puts that are in the money for July 15th. So a lot of potential buying power here over the next couple of weeks, and this trend has not changed. No matter what has happened with the stock, you've seen these very large expirations, and even throughout the rest of 2022, there's a lot of very large expirations even coming up. So what's the consensus here? Well, the consensus is no matter how long it takes, this will come to fruition. There's literally no other way to put it. There's no way it cannot. If
Give me a
shorts
break.
don't cover when the stock is down, right? If you don't see shorts that come out here pretty quickly and start to cover as AMC is sitting around 12, 13, 14, $15 per share, then odds are these algos, they're just going to continue to short the stock until it culminates into one large event.
That's ridiculous.
And then they're forced to cover.
It's nonsense.
Probably see bankruptcies, right? Massive margin calls, so on and so forth. So it's only a matter of time, in my personal opinion. The market environment is certainly
ignorant.
there, and liquidity is certainly stretched.
If there's one thing
so it's going to be very hard for
that you can be sure of, after what happened last year in GameStop, no, they're not going to let that happen again. You got to be fucking dumb as fuck to believe that.
them to service margin calls the same way
Seriously.
they did in June to remain in these short positions. They're more than likely, the vast majority of hedge funds are going to be forced to cover during this next rally. So
what rally? Why? Like there's going to be a massive rally because retail is going to buy like they did last year. They don't have the money to do it. The only thing rallying the stock is short covering. So short covering is not literally going to cause the short. It's not going to cause a short squeeze because they're not forced to cover. They're taking profits. I mean, it's so stupid. They're taking profits. Oh my God. Okay, here it is. Here it is. AMC, Google Trends. So this is the GameStop squeeze here, January 2021. And notice that it was actually more popular than here in late May, early June. And then here's the, November, December. And then here we are now. And it's back down low again. Basically lower than it was after the run-up last summer. Now, it probably is searched more than stimulus now, but I mean, we can find out. Yes, AMC is searched more than stimulus now. But guess what? It wasn't last year. Oh my God. He was wrong about that. Holy fucking shit. Oh my God. He was fucking wrong about that. Oh my fucking God. Lynn. Hello, my friend. Welcome. So, yeah. Wow. There's some data. Hey, Tyler. This is the truth right here, buddy. You're wrong. God. I'd be willing to bet. I'd put money on the fact that nobody else bothered to look that up. Not a single person actually bothered to look that up. That's what we do here. Where nonsense comes to die. Nonsense comes to die. A very slow and painful death. Well, actually, a very quick but painful. I don't know. And it you know, yeah, I paused the fucking video and I'll look the shit up. And it turns out that he was wrong about that, and I'm not surprised, but I actually kind of am surprised a little bit, but not really. Wow. Terrible. Horrible.
That's what I have for you guys here in this video. That's the truth about AMC. And you know, that's why I don't care if people buy, hold, or sell. That's why I don't care how long it takes. That's why I don't care what happens.
Good.
You know, I literally,
that's good,
I buy
at least.
and I hold. I buy options sometimes, and that's what I do.
How do those work out for you?
For sure, what's going to be the main?
Wow, he sounds like a conservative. He sounds like a very strong conservative. That's just what I do. I buy and hold. I buy options sometimes. That's just what I do. You're never going to change my
driving
mind.
cause or
well, and he did. He did throw shade at Biden too over the gas prices, because the president directly controls the gas prices.
Be very soon. It's going to be very soon because of the executive order, because of where the markets are currently at. But that's only my opinion.
Dickhead.
Let me know your opinion down below in the comment section. Hit the like button, subscribe to the channel, source, comments, questions, or...
I can't wait until this guy drops off this fucking platform. I mean, what is it going to take for these guys to leave and stop this shit? Honestly, being wrong consistently, perpetually, is not enough to do it. It's not enough to do it. What the hell would? What the hell would cause them? I mean, besides regulatory action, which I don't think will happen. Oh my God. So let's see what's going on here. Typical bullshit. Typical bullshit. I wonder if we'll see more short squeeze in the overall market next week. I saw Antoinette was asking about QQQ puts. I don't know. I am not sure. I mean, I'm certainly not bullish, but that doesn't mean that I'm going in on anything. Besides maybe thinking about something on one of these energy commodities here. But I'm just, I don't think any rally will hold, but we could have basically more or less a short squeeze in the overall market, maybe. More short covering. I'm not sure. I don't know. I'm going to hold off on anything personally, but natural gas is it gapped up like 30 cents. Equities, I don't know. I have no idea. I have no idea at this moment. Or really ever, but all right, Mr. Financial, not a financial advisor, but you can pay me $100 an hour to audit your portfolio. What do you got for us today? What do you got for us? The shorts did not see this coming at all. Got a boss lady card back here. Boss lady. You know who's the boss in that family? All right. All right. Fittingly.
Last week or week before.
Okay. Last week or week before? Yes, I got some volatility in my connection here. Okay, maybe we're back. The VIX, should buy calls on the VIX on my internet connection.
Before I share with you videos where people like Kevin O'Leary, Mr. Wonderful from Shark Tank, Elon Musk on his views about recession and bankruptcy is about to come, and I want to kind of follow up on that.
Guess what?
Of that with another.
Guess what? Elon Musk now said that Tesla is going to hire people. He not only flip-flopped on the cuts, reversed those. He actually said that they're actually going to bring people on. Elon Musk flip-flopping more than John Kerry in the 2004 election. That was just the first thing that came to mind the other day.
Data that just came on Friday, which is kind of outlaying a little bit what they're saying, which, if you remember what we said on those videos, is kind of a thing that will push or could be a good catalyst for AMC to go a little bit higher. So let me just share with you a little bit of this short video before we can continue, because this really outlays what, we were thinking and what they were saying. So let's go.
We were talking about Tesla making headlines this morning after Musk said the company would look to reduce headcount by around 10%, but that trend extends.
Why don't you
almost all of tech.
do the audio right?
Said that it's even planning to rescind some offer letters as growth companies look to save cash. Kate Rooney has more on what's becoming a pretty significant hiring freeze, especially with companies adjacent or dependent on crypto. Yeah, that's right. We are starting to see some of the cracks in crypto. Coinbase extending its hiring freeze and rescinding some job offers already made to applicants. It comes 2 weeks after announcing
Looks like a dentist's
pause.
office.
In a memo this week, executives say it's become more evident.
Looks like Dr. Dentist's office, right?
Measures to
Lynn?
slow some of that headcount growth. They talk about market conditions. It comes as Bitcoin is still down more than 50% from that all-time high. This week, we also had Gemini, the exchange founded by the Winklevoss twins, cutting 10% of its workforce, also pointing to those crypto market conditions. In a memo, they call this a crypto winter and say, we are not alone, suggesting we may see more of some of those layoffs. And across tech, the layoffs really continued this week. According to one open source tracker called layoffs.fyi, another 21 companies.
Yep, I showed that. Hey, I showed that.
Startups saw the highest number of layoffs.
I can't remember if it was on stream or if it was in the Telegram chat. I know I put it in the Telegram chat, but I brought this up a week or so ago. Layoffs.fyi. I honestly can't remember if it was on stream or not, but now I know I pasted in some charts from here. It'll load. It'll get there.
Since 2020, that was, of course, the depths of the pandemic, was about 17,000 for the month of May and 21,000.
Well, that's what I wanted to show anyway.
This year. That total is more than all of last year.
Basically,
combined.
it's layoffs are currently at a level that have not been seen since 2020. Didn't really show. Okay, here we go. Okay, new startup layoffs since COVID-19. So May had 16,000 new employees laid off. That has not been seen since May of 2020. And May of 2020 was higher in layoffs, but you haven't seen that number since. And here's by quarter. So Q2 2022 of this year, higher than third quarter of 2020, but lower than second quarter of 2020. Right in the middle, essentially. So that's not good. Not good.
In here, this total is all of last year combined, and we are just beginning the 6th month of 2022. So if I share with you another article giving you details, you can see here from Yahoo Finance wave of...
My question is, what does this have to do with AMC? AMC is going to have to lay off employees, and that's bad for the shorts. I mean, where's this going?
Layoffs is sweeping the U.S. Here are the firms that have announced cuts so far, from Carvana to Netflix. We have, for example, here Carvana about to drop 2,500 people. We have what else here? Reef. 750 employees. We have Gup off more than 400 people, better about 4,000 people. This is huge. Noom, almost 500 people. And then we have Peloton, 2,800 people. And then we have Thrasio, 20% of the staff. That is a lot. That is a lot. And then Robinhood, 300
Razio.
people.
What are these
Tesla
companies? Never heard of these.
Said 10% of the people, and then we have Wells Fargo, unknown number of people in mortgage lending, because that is also dropping significantly. And then Canopy Growth, I can go on, etc., etc. So what is the kind of the bottom line here when it comes to the link between this and AMC? Well, the thing is, we knew this when we had numbers around the GDP.
By the way, I love how he paused there. He's like, all right, what is this link to AMC? Okay. What am I going to pull out of my ass here? Food 52. Food 52.
Link between this and AMC.
Can't wait.
The thing is, we knew this when we had, numbers around the GDP growth, the economy, where the direction we're going. There is a lot of uncertainty about where the economy is going, because we've never been in a spot such as this one now. And that is why some of these companies, you know, if you're going to pay attention to, a lot of these, if not pretty much all of them, maybe except Tesla and Wells Fargo, are startup, you know, or fintech companies. But, you know, from the video from CNBC, this is pretty much in the tech sector, all right? The startup, you know, the high growth, the next unicorns of tomorrow. But guess what? These are also the companies that are the favorites in the portfolios of the big hedge funds or even the small hedge funds, because these are the companies that used to make a lot of money back in 2021 and the end of 2020. All right.
Okay. Right. So they're still massively long on them, even though most of these companies are down already. Okay. That makes sense, right?
For the last 2 years, these were the companies you needed to be in order to make a lot of money. I mean, look at Coinbase, look at Robinhood, you know, look at, you know, even Wells Fargo with the mortgage, you know, lending.
Robinhood was never that company, never that stock. It only gone down since the IPO.
Because mortgage rates are also dropping and mortgage applications are also dropping. So what used to work is not working anymore. So it means on top of the market conditions, cratering for those, you know, companies, even though, you know, there are just small hedge funds, even for the big ones, where they put the money is not drying up in terms of stocks, holdings, and valuations. All right.
I mean, but the problem is that wow, look at that. Pause. Institutions are not like retail investors. They don't sit on losses. They don't let the losses continue to rack up and not capitulate or take action or what is that word? Oh yeah, hedge their positions. They don't do any of that stuff because it's not like they're a hedge fund or anything. I mean, this is it just totally misses on every cylinder here.
So when these companies are laying off, their stock price is also cratering. The stock price is also, you know, dropping. Why? Because if you don't have enough workforce, you can't grow as fast. So you are pretty much in a stagflation mode. And nobody like to be invested in a company that is not growing. That's why, you know, the stock is dropping, because money is getting out. So by the stock dropping, the valuation of those shorts, I mean, those hedge funds who are also short in AMC.
Not the shorts.
Possibly in potential.
Whoa, that was a little bit of a slip up there. As the money's coming out of those companies, the value of those short, I mean, what? Oops. Whoops.
Out. So by the stock dropping, the valuation of those shorts, I mean, those hedge funds who are also short in AMC, are possibly in potential.
So there's an assumption right there. The same hedge funds that are long on these tech stocks that are now cratering are the same ones that are short on AMC. So it's going to affect their overall ability to continue to short a company that's down 75% from its all-time highs. Yeah, that makes a lot of sense. Great logic.
All right. And with what we know is coming in terms of the Federal Reserve being very, very aggressive in reducing interest rate, it's just another pressure adding on their shoulders. And it's going to be to the point where some Monday, or maybe a Friday or a Tuesday, but someday, we're going to wake up and start seeing AMC trading pre-market at 100% or 50% up. And every single day we might have 50 to 100, even more.
That's exactly my thoughts, Model 3, dude.
Them to start covering. And as this rush to the door is coming, because pretty much cornered. They've been cornered, but, you know, at some point it will be so much
wrong word to use there, pal. Cornered.
That they'll have to get out. And that's when we want to be still in this play, and we want to see the 10 days. That's why, personally,
10 days. I haven't heard that term in a long
see
time.
The bottom of it. It's too damn interesting, don't you think?
What? Okay. Wow. Good video. You know, great video there. I love the evidence presented. God. I mean, I don't even know anymore. How do these guys do this? How do they do it day after day after day? I guess if I were making a shitload of money, it'd be different. Maybe it'd be different. Maybe I'd feel differently. Probably not. But clearly, I'm on the wrong side of this one. I should have gone the other way last year. But, you know, that will never happen. I'm kind of disappointed in the selections today. Have to admit. Throw that whole channel away. I agree. Throw the whole channel away. Throw most of these channels away. You know, seriously. Man, Frankie is just pumping out the bullshit. Pumping out the bullshit, man. Wow. Wow, he took some of that strike up today. He's ready to perform. He's ready. Look at that face. He's ready to strike. Oh, my God. Oh, my God.
Hey, this is Frank. Let me say I'm not a financial advisor. Anything that I say in this video should be used for entertainment purposes only.
Look.
Whatever I say in this video is my opinion. It may not necessarily be factual.
Look,
man, I get tired of people in our community making excuses as to why AMC can't hit $100,000 a share.
He is directly reacting and responding to Trey here. He's 100% reacting to and responding to Trey. Because Trey just put out a video, we watched part of it earlier, where he says, you know, in a very circuitous way, but still, nonetheless, he says that 100K is not possible. Here it is, 100K. And normally, I would think, well, he's gonna actually justify 100K per share, but actually, no, he doesn't. He says it is not possible. Not likely, not possible, whatever. He basically shits on the idea. So now we have the new darling of AMC grifters. The multi-level king, the king of MLM. I'm sorry, network marketing. Network marketing king. Frank Mohammed. On the strike up here, directly responding to him. I mean, I don't know if he'll actually mention his name, but this is like an Amber Heard, Johnny Depp thing, right? Because we know who said recently, AMC cannot reach $100,000 a share. So, you know, in this analogy, Frank Mohammed is Amber Heard. Just to clarify that. He is the Amber Heard to Trey's Johnny Depp, which, wow, that doesn't sound right at all, but pretty twisted. All right.
Doing our short squeeze. You see what I'm saying? The hedge funds and the 1%ers, they didn't make excuses when it came to trying to make trillions of dollars off of retail investors. They didn't make no excuses, man. They sit back and they put their numbers out. And I'm sure they figured out, man, over a period of time, how they can make money off retail investors. They knew. They didn't make no excuses. Say, man, we can't make trillions of dollars off of retail investors. That's just too much money. They're going to see all this money.
It's not hard to do when you have a bunch of dumb people that have no idea what they're doing and listen to people online who have no idea what they're doing. I mean, seriously. Seriously. They didn't have to think about it. They didn't have to come up with an excuse. All they had to do was let these idiots run wild with this shit. That's what they've done. That's what you're doing. No excuse needed, my friend. No excuse needed.
We just can't make that kind of money.
Now, that's a good point. We have a good point in here. Frankie thought he was going to be a millionaire selling strike up. He probably did. But, you know, to rain on his parade, why did they have to go out of stock? Why did it have to go out of stock? They sold out. Now, you know, 3 years ago, I mean, who knows? We might still be able to get some from him. But then it came back in stock so you could get the strike up. Obviously, it's still back in stock because he's on the strike up. He's ready to perform. Look at him. He's ready to pounce.
money we making off of them, and we just can't make that kind of money. They didn't say that, but you always got people in our community, man, trying to figure out and have empathy and try to make excuses as to why AMC short squeeze play can't reach $100,000 a share. And what prompted me to do this video is that somebody in our community, somebody that I kind of look up to, and he was one of the reasons why I kind of got in AMC. He did a video as to why it'd be extremely difficult for AMC to reach $100,000 a share. And he even made it difficult, man, to look like he even made it difficult, make it seem difficult for us to even reach $10,000 a share. You see what I'm saying?
I can make it difficult. I can make it look difficult for you to reach $40 a share, my friend.
The picture that he painted, that it'd be difficult for us to reach $100,000 a share. It'd be difficult for us to reach $10,000 a share. And it's just like everybody else. Everybody else use those same excuses. They talk about market
for
cap,
grifters,
and they talk about it's not being enough money. Them the main excuses that people use. So he was saying that in order for AMC to reach $100,000 a share during the short squeeze, we would have to have a market cap of $51 trillion, which is really the market cap of the entire stock market. And he was saying in order for us to reach $10,000 a share, the market cap would have to reach $5.1 trillion. You see what I'm saying? Granted, man, I agree, that's a lot of money. But, man, $5 trillion, I get the $51 trillion. I get it. I get it. That's a lot of money. You see what I'm saying? It's the market cap for the entire stock market, man. I understand. But trust me, man, they got money. I ain't falling for that, though. But here's the thing, man. $5 trillion is not a lot of money, man, for the 1%ers. You see what I'm saying, man? He's making it seem like it's difficult for them to come up with $5 trillion. My thing is, man, if let's say if it went to 100,000, the market cap ain't gonna stay like that. It's only gonna stay at that height for a brief period. If it reach $100,000 a share, it ain't like everybody, man, is going to be staying around to try to make $100,000 a share. It's not like it's going to stay at that market cap. But
that's a good point. But again, going back to the literal easiest debunk of the Moass ever, you have this massive, massive, massive overhead supply. This massive overhead supply that was created when the apes bought in at the highest levels last summer. And now you have a situation where people are selling off at any opportunity to save any of their capital, get any of their capital back, each time pumping lower, weaker pump, and the dump phase going lower each time as well. So for that reason, any rally is sold off. You can't even get back. You can't get back to, where is it? 36, which is half of the now. Well, I mean, half of. Now we got to go to 32. That's half of the 52-week high. Right there. That's where we hit. That's where it hit last time. Essentially, that's where it hit. This time, it looks like it hit at 15, just under $16. But every rally sold because there's way too many people that listened to these grifters last year and bought in at the highest levels. And with the way everything's going now, especially, they aren't going to keep holding. Maybe some of them will hold to zero. They are extreme noise traders. They make no difference whatsoever. Most people will not. They will not hold it to zero. They can't. They literally can't. Especially as the economy goes even further tits up, let's say. So, this narrative, this fantasy that somehow there's going to be a massive pop and It's going to be sustained. It's not going to be sold off instantly like every other rally was. Every other rally. Except for the first one. Because there were nobody bought back here. Nobody bought back here. There were no shares with this average cost held at any price level above $23. No price level above $23 was held. So when you got over to here, you had no natural selling because everybody was buying in. Everybody was still buying in. They were excited, happy to be a part of it. But now you have this massive overhead supply of bag holders here who are seeking a way out at any opportunity at a non-zero price level. So, I mean, he's really, all he has to do is follow through with this thought and scale it back. Yeah, you're not going to get $10,000, $100,000 because people are going to sell off way before that, if it did happen, if it were to happen, if it were possible. But the reality is the only thing causing these rallies is short covering. That's not a short squeeze. That will not result in a short squeeze if the shorts are in control. If the shorts are in, that's the opposite of a short squeeze. That's the shorts have you by the balls, is what that is. I mean, hopefully you have a strike up. So, everything's solid. But the shorts have you by the balls. If they're in control, you're not going to have a short squeeze.
But besides that, to paint a picture that if the market cap reached $5 trillion, that's a lot of money, man. That's not a lot of money, man. And we always try to make
and no resistance levels on the way up. I mean, shit. It's caught in this. Now it's caught in this basic this area here, which has a ton of volume in it from before. So it'll be lucky to even get out of this area. It'll be lucky to even get out, above. I say $20. That would be my next area, I guess, that I would look for. But it's caught in all this now. It's just going to bounce around and go down. There's it's clear. I mean, it's clear now at this point. None of these rallies stuck. This was the move. If you weren't in on this move, you were too late, and you're gonna pay for it essentially. All right, we'll go over to New York Angelo. Yes. I mean it's basically, I mean what Model 3 dude's saying here is essentially the same thing. You have people whose average cost of shares is way up here, or even in this range here, anywhere up here, anywhere up above $35. And as the price moves up towards those levels, you're going to have people selling, and that's going to create downward pressure like it has every time. And even if it somehow broke up through this section, you'd come up to this $40 region and it would immediately fall. It would immediately hit the ground. Immediately. Because there's all this interest here that is ready to get out. They're ready to get out at a loss, even at a loss. So it's just not likely at all. It's just not practical. And this isn't really even trading. It's psychology, really. It's just psychology.
Excuses, man, for the 1% when they come to paying us. $5 trillion, man, ain't a lot of market. Look, if you look at the derivative market, It's $1.2 quadrillion, man, in the derivatives markets. You see what I'm saying? You got over $70 trillion, man, in the stock market. It's always more money out there than you see.
What?
Man, these people, they got a lot of money. You got hedge funds, you got banks, you got brokers, you got the DTCC, and you got the feds. You see what I'm saying? Man, these people got money. And I feel like, man, we need to stop making excuses as to why these folks, man, can't pay us. You know, to make $10,000 a share, man, look like that's a lot of money. You know, a $5 trillion market cap. Hey, man, that's BS. I'm just gonna.
I tell you, you know, what the grifter status has come to now. Boy, the bar has been really lowered, just like the price itself. But these grifters these days, these popular grifters, Frankie Mohammed and the Short Squeeze Channel and Tom Fudzulo, they make Trey and Matt Kohrs look like fucking Citibank analysts. Seriously, like this, the common, you know, denominator, or the greatest common factor here has just plummeted. It has literally been dumbed down. Nobody can say that they haven't dumbed it down. That's one thing they have done.
I'll be honest with you, man. I ain't saying this play can go to $100,000. Look, I can't tell people where to buy. I can't tell people whether to hold. I can't tell you whether it's going to go to $100,000. I can't tell you where it's not going to go to $100,000. You see what I'm saying? But I do know these people got money. And if doing this short squeeze play, some people want to save some of their shares, man, to try to reach $100,000, man, it's on them. I ain't got no issue with it. I ain't got no problem with it. But, man, I just got a problem with people, man, trying to make excuses for how much money these folks get. Man, they got...
What? I mean, that makes no sense. I got a problem with people pointing out the obvious errors in our fucking narrative. The fact that we're uninformed. I mean, come on.
They got a lot of money. But his video prompted me to do this video. He
well,
did
no
a
shit.
video
I knew
about,
that
you know, he
immediately when I started watching your video.
He was apprehensive about doing the video. He stayed away from that topic the whole time because he didn't know how people was going to feel about it. You know, so he did a video on it. And when you watch the video, basically what he was talking about was how difficult it'd be for the share price to reach $100,000 or for the share price to reach $10,000 simply because of the fact, like everybody say, well, man, they ain't got the money. They got to come up with the money and the market cap going to be too high, man. All this BS, man. But thank you for taking time out to watch the video. Have a nice day.
Okay, Antoinette's got a good point here that they sound like someone owes them something. It is weird. It is weird. It's very weird. Like, oh, these people, these institutions, these hedge funds they have a lot of money, so they can spare some. What? No. So you basically, it's like a weird handout or something. I don't even know. It doesn't even make any sense. It's just ridiculous. Ridiculous. Now we have let's see, what did I get? Jack Hunter did okay. Jackson Hunter rap. Well, maybe we'll close the stream later with a Jackson Hunter rap. What? Shrine Auditorium? What? Upcoming? That was 2 days ago. What the hell? Oh, look. Jack Hunter hyping Evergrande. Officially in default. Officially in default. What's suspect about the SEC video? I think the meme stock traders are upset with themselves. They must be, that they bought into something that even the SEC would caution them against. And it's not even investing in it, buying into it. It's over-investing. It's over-investing. But this is what happens when you listen. This is what happens. when you work to change things. First they say you're crazy, then they fight you, then you change the world. That's what happens. That's what happens. They bought one share, so they're owed millions. I mean, clearly, they took the risk. They took all the risk. Apes took all the risk. Oh, Jack. Jack. Still running only at 720p. Even Scotty's got more
hey guys,
pixels
it's
than you.
Hunter. I'm back with another AMC stock update. Today is Sunday, June 5th. Please hit the like button. Please smash that subscribe button. I love and appreciate you all. On Friday, AMC was down 6.39% in the regular trading hours, ending the day at $12.45 per share on a volume of 38 million. So not the best day, pretty average volume, pretty blah day. This is not financial advice. I'm not a financial advisor. Please do not make investments based on what I say in my content. Check this out right here. Evergrande is now finally in default, according to the paying agent Citibank. This is from Dr. Marco Metzler. You might have seen him on Boss Blunt's YouTube channel. They have a couple great reviews, so check those out if you haven't. But yeah, Evergrande is officially confirmed in default.
Why doesn't any... I hope that he interprets that for us. What does that mean? Besides Moass tomorrow at 2 p.m.
By paying agent Citibank. So this has been going on for, I don't even know how long, 9 months, I think, something like that. But in any case, great. Evergrande is now officially in default. And so that means that people that have bonds in Evergrande, those bonds are going to be worth way less, if not worth absolutely nothing. Okay, and some of these American institutions have bonds in Evergrande, which was a gigantic real estate company in China. Okay, so if they no longer have value in those bonds, then they can't use that as collateral to hold positions in other plays, and maybe a short position in AMC.
He just really used play to describe like a hedge fund or institutional position. I think he did. They can't use that collateral for other plays. Oh, Jack. Oh, Jack. It's time, it's time to get out of kindergarten, my friend. But, this is another one of these great assumptions that should be questioned and scrutinized. The notion that whoever shorting AMC, which, let's be honest, we don't even really know unless they disclose it. We don't even know if Citadel is. It is that whoever's shorting AMC, which, by the way, are smart funds and institutional investors because they're profiting, those people are depending on Evergrande bonds to finance the collateral for their short positions on AMC. That's the assumption. It's never been demonstrated. It's never been proven. It's only been speculated on by Boss Blunts, and then any grifter that's a Boss Blunt's disciple, which there's a lot of them. There's a lot of them. But so Evergrande officially in default. Officially. It's officially confirmed. Just like, the squeeze with the Moass was confirmed. Elon Musk confirmed them. Joe Biden confirmed the Moass. Adam Aron confirmed the Moass. Ryan Cohen confirmed the motherfucking Moass. So, if we use the definition of confirmed that the apes move on, this means nothing. It means nothing.
Your GME. So that's kind of the thought process behind Evergrande defaulting, and there had to be some legal processes that took place to declare their bonds at a very low grade. They put grades on the bonds, and so they have to go through this whole court process, and that's what was going on to finally grade their bonds and finally declare them in default. So it's like this whole legal process thing that I had no idea about, so I had to learn about it. But check this out right here. Top Gun Maverick is Tom Cruise's biggest domestic box office success. It's only week 2. This is from the
Yeah, no hope for your generation. You sound like a Trumper anyway. Sound like a Trump card.
Times. In its sophomore outing at the box office, Top Gun Maverick has already become Tom Cruise's highest grossing domestic release of his career. Tom Cruise, one of the most famous actors of all time, male, female, this generation, old generation, it doesn't matter. He's one of the most famous. And this film that just came out in AMC
couch.
theaters and
one of the most famous. Only he could do that.
AMC theaters because it's the biggest one in the world. This is Tom Cruise's highest grossing domestic release of his career. The patriotic action film earned $86 million this week for a North American cumulative of $291 million. And then check this out, championed by audiences and critics alike, Top Gun Maverick sustained only a 32% drop in North American ticket sales during its second weekend, the lowest number for any movie that has launched at one.
Wow. Top Gun is the best movie ever. That Reddit ape was right. That Reddit ape was right. Oh, it's the best movie ever in history, in the history of moving pictures. Model 3 dude wants us to use some common sense. Every hedge fund is shorting AMC and cannot find a way out, so they're going to crash their fund to win against the apes, and that's it. Right, exactly. All that with AMC, still not a profitable company. Right. But, you know, Top Gun is still going to be, you know, performing because it's on the strike up. Tom Cruise is on the strike up. It's still going to be performing at fucking Christmas time. It's only going to be down 44% in revenue by Christmas time. So Top Gun is the catalyst, period. Okay? And the hedge funds know that. They know that. So they're just going to have to crash their fund to find a way, you know, to win against the apes because it's all about their egos. It's all about their pride. It's all about their fragile little boy egos. The hedgies I'm talking about, of course. The apes, they're the ones with real intestinal fortitude. They're the ones with the strong resolve. They may not have a lot of money. But they've got the mindset. They've got the mindset of a lottery winner. Oh my God. Yeah, I can't keep that up anymore. We also have the gold mining company, Wyckoff Mining. Yes, how could I forget? How could we forget about that? And we've got the popcorn business. Yes, we have that. We have mining. We have popcorn. We have, summer blockbusters coming out. We'll see. Moass tomorrow at noon.
$100 million or more.
Chinese time. China time zone time. Shanghai time.
That has launched at $100 million or more. The records just continue to break, man. Records continue to break. Check this out.
Jack continues to bake. He's baked.
Sorry, here. This is from CEO Adam Aron. I guess there was some info.
Nice corn farmer fucking stock photo. I love that. Where'd you get that? I bet he paid for that on fucking Shutterstock. What do you want to bet? Somebody paid for that image from Shutterstock.
About the supply of popcorn. I didn't notice it. I typically don't pay attention to that type of stuff, but it amazes me the totally false info about AMC on the internet and in the press. Is it intentionally designed to scare retail shareholders? The latest FUD debunking. AMC already has under contract a supply of very high quality popcorn, all that we need for the next 3 years. Good to hear.
So I saw somebody on Reddit hyping that, and they were talking about, they actually mentioned that, I don't know where it's at, but I don't want to distract too much from that. But they were saying that Aron was talking about corn futures, like commodity futures for corn. But now that I see this tweet, it says high quality popcorn, not corn itself. They're not going to be manufacturing the popcorn. Obviously. But I just didn't think about it because they were saying corn, the corn commodity itself, like raw corn. And they were using that as some kind of catalyst for something, you know how they do. So, but no, they're just, I mean, they're not even buying popcorn. They have some, you know, they have a third party that you know, brands it for them and this and that. And they just kind of manage the operation. So we still have natural gas up. We have equities marginally up. Actually, the Russell 2000 is leading the pack by 0.04%, and volatility is still down 0.25%. It'll be a fun, looks like another fun week. Model 3 dude watched Top Gun in his living room for free on opening night. Well, you're going to hell, my friend. You are going to hell for that. How dare you deprive AMC of that much needed liquidity? I think he probably is high. I'm sure he is. Apes keep deep-throating Aron's corn stock all the while he laughs, cash out, leaving the apes with full bellies and bags. Corn prices are through the roof. So, yeah, again, we're not talking about straight-up corn. It's processed anyway. So I don't know what that does to it, besides probably make it more carcinogenic. But yeah. None of this changes the fact that there is a massive overhead supply of shares here at these high price levels that every time this tries to rally, they get sold off because the apes bought in at the top, because the influencers, these guys, misrepresented the situation. So you can thank them. Really, they should thank them for it, putting the ideas in their head. Nobody is selling is the biggest lie probably in this whole thing, because that right there is what caused people to buy into the peer pressure, give into the peer pressure of not selling when they could have sold for a profit. Now they're just trying to recoup any of their losses they can. That's why none of these rallies sticks. None of them will stick. All these rallies are caused by short covering, and they will get sold off instantly by retail investors from up here who are holding the bag. Period. There's no case for a short squeeze anymore. Zero. When the shorts are in control, that is not conducive to a short squeeze. It's literally the opposite. They have you by the balls. I'm repeating this every 30 minutes.
High quality popcorn, all that we need for the next 3 years. Good to hear. And then I went to an AMC theater and saw our guests greatly enjoying their evening at the cinema. It made me so proud to have led AMC to health despite the pandemic, and so grateful to you retail.
Well, it's a good thing he furloughed himself during the pandemic and didn't take $10 million extra dollars in compensation. Oh, wait. Yeah, never mind. Sorry.
Investors
I didn't
in
confuse
AMC
you somebody else.
The cash we needed to survive. Lesson 1, all cash is king. True. Check this out here.
Yeah. Cash is king. Sure.
This is a post on AMC stock subreddit, and I really hope people don't take these posts seriously.
Oh, don't worry, Jack. They do. And it's partially your fault. But anyway.
I genuinely hope that. So it says, FYI, the floor is $2.3 million. They're saying the floor is $2.3 million per share on AMC. The floor. It says, been here a long time. Let's not forget it goes up 100K every month. Moass doesn't happen. Pay up, you
cuck
blank,
fucks.
blank. So these are obviously children or people that are thinking.
No, they're people that are subscribed to you, sir. They are literally your subscribers. Their traditional GOAT, 1773, is probably subscribed to you. You know, that's who these people are. They saw your interview with Astro last year, and they're like, holy shit, I got to subscribe to both of these dudes. They get it. And now, this traditional GOAT, 1773, is putting out this stuff. And you can be sure that some of these people actually do believe it, but, you know, they're going to find out really quick. Well, probably not. Never mind. They're not going to find out shit.
Like children that are making these posts, the floor, first of all, you can't say what the floor is. There's too many variables. Second of all, 2.3 million as the floor. I mean, I'm not saying it's not possible, because theoretically
I'll say it's not possible. It's not possible. What are you talking about? What are you talking about? That, I mean, this is beyond delusional. It's beyond ridiculous. And the fact that he's not even able to call it out because he's worried about losing subscribers. I mean, let's be clear. Why is he saying it's not? He cannot say it's not possible. Well, because people wouldn't like that. New video, not a lot of comments.
But to say that it goes up 100K every month, Moass doesn't happen, that's a completely arbitrary logic. It's illogical.
I want Jack
actually
to capitulate to calling out this nonsense. I think he's showing us right here that he's actually capable of doing it, which means that he's a grifter, sadly. But hey, Jack, why don't you come join our team? Okay, it's much more fun. It's much more fun, trust me. Probably lose less hair. You'll lose less hair. Now, I don't know if you're going to be able to grow your hair back. You might have to talk to Frank about that. He's probably got some hair tonic for you.
I really hope people don't take these posts seriously. That's not how you calculate a floor anyway. So, yeah, I looked at some of the comments, and it looked like they were joking around, but you know there's going to be some people that take it seriously. So
well, that's what I said.
Jackson Hunter, I'm telling you that you can't set the floor price before the squeeze happens. That's not possible. You might as well go to the fortune teller down the street, pay $40 for them to read you cards and tell you what the floor is. It's better than this post right here. So I just hope people don't take these posts seriously, man.
They will.
My floor is
it's
high.
Your fault.
My floor is not 2.3 million per share. I mean, there's too many variables, and I don't think the government would let it go that high. With that being said,
fuck the government. There's no way that market participants would let it go that high. There's just no way. No way. It wouldn't get past 72 again. It wouldn't. Where's that Houston dude? Houston Wade? 100K is more reasonable. That's right. Yeah, I mean, that's true. Now, let's come back down to earth here. There's no theory it's possible where AMC goes 2.3 mil a share. That isn't a conspiracy. It's just ignorance, stupidity. Lost followers equals less batteries for a... I almost read fleshlight at first, but the heated one, vibrating one. Houston Wade, ask him how MMAT is doing. That was his original grift. Strike hair tonic may cause impotence. Strike up. Strike up the band, my friends. Okay. Now that's a good question, though. We can look up Houston Wade. Houston, we have a problem. What a clever name for a podcast. Houston, we have a problem. Cool. Yeah, Houston, we have a problem. You're a fucking grifter. Nonsense. FUD artist. FUD artistry. It's not even at its finest. Oh, look. Doesn't even want to load. Wow, look at that handlebar mustache. Cool. This guy always wears like stupid Hawaiian shirts too, right? Or well, I guess I think he was wearing Hawaiian shirts for a while. Houston, we have a problem. 2 hours. Charity Tuesday. Help Sri Lanka. Send me weird shit, cool shirts, and Jamaican curry. Is this the guy? And this is the guy who was served the lawsuit in like the restaurant where he was working as a server or something. Is that right? Or do I get that mixed up with the other guy? I think that was Houston Wade, wasn't it? We watched a video from somebody talking about that. Come on, show me his damn shirt. Oh, okay. It's all way too long. Lies, mental health, and metamaterials. Okay, no, this is another. I don't know. This is some kind of cat fight there. Some kind of cat fight between Houston Wade and some other gal. Yeah, I just made that up. Heated flesh. I don't know. Because of this live chat, Lynn made pot brownies. Where are ours? Yeah, he's the waiter. Okay, gotcha. Right. How the squeeze will squoze. God. Why do people say squoze? It's so stupid. It's not cool. God damn.
Hello and welcome to Houston. We have a problem. This is a little mini episode I'm calling episode 1.5.
This is from May 4th, 2021. It's the first short video that I was able to find. So, love this channel. I love this dude's channel vibe. And he's smart as hell. All right, Caleb. Let's find out. I mean, I know we've watched him before, but it's fun to go back in time and look at what these guys said before. I think it is more believable with pot brownies. It's more believable with pot brownies, tabs of acid, or lines of cocaine. Allegedly, hypothetically, supposedly. Allegedly, supposedly, hypothetically, you know. More like how the dip will shit. There you go. There you go. What's he got in the background here? What is that? Is that a VCR? Or is that a turn? What is that? Oh, it's a printer. Okay. Crystal growing kit. It's like what you get your little nephew. Crystal growing kit. Jeez, what a cool guy. All right.
I've been getting asked a lot of questions about how the GameStop squeeze will squoze, and well, the other meme stocks, AMC, Bed Bath & Beyond, you name it. This is something that's kind of piqued my interest, and I've tried to run some thought experiments. And while I'm still working on my episode 2 on healthcare, which is, let's face it, it's a big topic, and it's taken a lot more writing than I anticipated, but it's going to be good. It's going to cover a lot, and I think it will open some eyes. Until then, let's think about this. Something simple and easy and fast.
Comes across as a cocky asshole to me.
How do we feel it will turn out? It's most likely going to be something different than we expect. Why is that? Basically because there's an adversary involved. They're working day and night trying not to just survive, but to thrive.
Got me working day and night.
So we have to work through these possibilities and assume that because we have an adversary, it's not going to be the perfect mother of all squeezes that will just ultimately give us all
right,
our riches.
We're coming over to Antoinette's house.
We've got to kind of consider what obstacles do we have keeping us from achieving this goal. Well, first of all, we think about what the perfect squeeze would look like for us and what the perfect squeeze would look like for our adversary. One way I like to think of it is
this guy's got
model.
And like an annoying college adjunct professor or lecturer. He's got like an annoying lecturer, assistant professor wannabe kind of vibe to me. You know, I could be wrong. But I mean, I had some, you know, some professors and teachers along the way that I, you know, absolutely loved and learned so much from. But then there were also the other ones that, you know, just thought that they were a lot more than they actually were. Like, you're literally a lecturer, and you think that you're a full professor, and you share an office with somebody. That's the kind of vibe I'm getting here.
If you remember a year ago at the outset of the pandemic, you were hearing lots of talk about utilizing the shutdown to flatten the curve. And what was meant by this was they wanted us to slow the transmission of the disease over a longer period of time to reduce the deaths and limit overwhelming the hospitals with lots of cases. And if we hadn't shut down, we would have gotten this maximum pain curve, this curve that just rocketed up as
equating
tens of thousands,
COVID in the stock market
millions
like that.
of people a day were getting infected, and there was no way our hospital system was going to be able to maintain that at all. And what ended up happening is we flattened the curve. We suppressed how many people got infected by limiting social contact, enacting mitigation efforts like wearing masks and social distancing.
So let me just, you know, jump in here. So basically what he's going to say, what I'm going to say is, this is not what happened. This is what he's going to say is going to happen. Or maybe he's going to go opposite. I don't know, actually. But this is what ended up happening with, I'm talking about with the stocks now. Like, this is what they wanted. So I guess it is opposite. This is what the apes wanted to happen. A massive shot up. What ended up happening was a slow bleed out. Okay. I can see it. I can dig it.
And by doing this, it dragged out the pandemic over a longer period of time, but with less maximum pain to the population. We had relatively fewer deaths than we were expecting, and we had fewer hospitalizations. The hospitals were less likely to be overwhelmed, and it gave us time and allowed for us to develop vaccines and to develop treatment methods, and that's kind of the goal. Well, our goal with this squeeze is we want maximum pain for the hedge funds. And that means we want a really, really, really sharp spike with dozens of
so you went opposite with
margin calls happening every single day during the squeeze, and more hedge funds going under and being liquidated and forced to buy back the stock we purchased.
Remember, this is before June run-up of last year even. So it's really interesting to go back and look at this shit, because I never saw this last year. I never paid attention to this clown.
These relatively shorter make the price higher and the volume's insane. So what the hedge funds want is they want to be able to drag this out over weeks or months, so that, you know, a hedge fund might get margin called here, one might get margin called there. And so rather than it taking 10, 14 days for the entire squeeze to happen, it can take 3 months or a year for the squeeze to happen. And that way the volumes stay relatively low, the prices kind of have a lower ceiling, and the hedge funds have a greater chance of surviving in the long term. We want to ensure this doesn't happen, basically. We want that maximum pain, really high spike, short.
Well, Wade, Houston, Wade, Earth to Houston. It's Scott from the future, and I'm coming to tell you that it didn't work out that way. Sorry.
Relatively short squeeze with a high price and huge volumes. Okay, so the other question people have is, what happens if the government steps in? Well, then the government can do whatever it wants if it steps in. We are limited in our ability to address that, but there are a few things working against the government stepping in.
They don't need to. They won't need to.
Let's say the government is a total buzzkill and they stop trading and they end up negotiating some sort of settlement price for our shares in order for the clearinghouses to balance their books. Yeah, it's going to suck. It will. But that settlement price will be for more than what we paid for it.
FUD.
So, you know, in the end, we will come out positive. The problem is that this could cause international investment in the United States to dry up. And the United States government cannot afford to have foreign investment be reallocated to safer, more regulated markets. The U.S. government depends upon having a well-regulated market to entice these investors into a relatively safe, large economy. And by halting trading and negotiating a settlement price, they're going to piss off a lot of international investors who bought into this market specifically because there was the potential for a really massive short squeeze. And the short squeeze is part of the market. It should be expected. What should not be expected is the massive naked short selling that the government has allowed.
Oh, so now we got to unsubstantiated assumptions. Oh, they didn't count on all the massive naked short selling that the government has allowed. Oh, really? So I'm assuming that you're going to show us that. You got a link to it in your description or something. Oh, no, but you got a link to where it can give you money. Literally a link to where we can give you fucking money. How much is your shit? Maybe I'll subscribe. Maybe I will. Oh, he only gets $166 a month? Well, that's nothing. But at least he shows it. He's the only one I've seen so far that actually discloses. And boy, how long ago were these pictures taken? How long ago was a picture taken where he's got the handlebar mustache on his avatar? Shit, looks like he's put on some damn weight since then. My God. Okay, no, I'm not signing up. I just want to see the prices.
That's what's going to bring everything down. So if the government has to stop
got kind of
trading
a
and negotiate
psychotic
price,
blank
they're going to have to do it not just for GameStop,
look on his face,
but probably
to me.
100, 200, 300 other stocks. And that's just going to be overwhelming. It's going to be easier for them to just print money and let the books get balanced. The other thing that...
Yeah, it's not going to be easier for anybody to print money now. And that's something that they did not count on. That's something that nobody foresaw. Well, I mean, some of us were talking about it and thinking about it, but none of these apes, nobody who was blinded by this fantasy was thinking about the macroeconomic situation other than, oh yeah, AMC is the hedge against the market crash. Negative beta. Negative beta. But nobody was thinking about, you know what, we're going to have all these problems next year or later this year, and I should probably think about, hedging my portfolio and blah, 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 and they're going to stop, they're going to begin quantitative tightening and raise interest rates, and inflation's going to be through the roof. We're going to be at 9% inflation in just a few months. Oh, no, they'll just print more money to pay us. Jesus.
That the government has going against it if it's going to try and stop trading and negotiate some sort of settlement is that there's a lot of long positions, a lot of really rich hedge funds, a lot of investment banks, a lot of regular banks who are betting on this squeeze to happen.
Oh, okay.
And they want their money.
So
this week I was reading
the apes are going to win because the institutions are betting on a short squeeze. Wow. I mean, I did not think that he was this dumb, this delusional, because the banks are betting on a short squeeze.
Article
there you go.
About how I think it's Bank of America and a couple other large banks have purchased millions upon millions upon millions of shares of GameStop and other meme stocks. And my thinking is this is a way of hedging against the margins that they've issued for a lot of these hedge funds that will ultimately get called. This is telling me that these banks think these hedge funds are going under and they don't have enough assets to cover what the price will be on this stock. So if they purchase GameStop shares and AMC shares and others, and they have those in their assets, then when the margins get called and those hedge funds run out of money, at least when the government starts printing money, they'll have to buy the shares back from these banks, and maybe they'll even make a killing off of the margins that they have being called on all the hedge funds under them. So I don't see the government stepping in to stop trading. I do see the government stepping in to keep liquidity going through the market. When banks have their assets dry up and cash dry up, it is a chain reaction that ends up flowing through the entire economy. People can't buy cars. They can't buy homes. They can't pay for school. They can't.
Nobody's buying that shit now anyway.
And if that kind of liquidity dries up, then the entire economy, not just the United States, grinds to the halt, but the entire globe. And we know how intertwined.
So if they don't go through with the Moass, it will literally bring the entire world economy to a halt. I mean, if you were trying to get people hyped, this is not bad. It's not bad at that. It's not bad.
These banks are, if a hedge fund like Archegos, or a family fund like Archegos can go under, and they're worth $30 billion, and we see massive losses posted by Credit Suisse, by Goldman Sachs, by
Credit Suisse,
Morgan, and others. And now we have to imagine that 50, 60, 100 other funds might just be as over leveraged as Archegos is, and they could all get margin called in a matter of days. So, you know.
Well, here we are a goddamn year later, 1 year and 1 month later, 13 months later, and they're still talking about margin calls happening next week. I mean, that right there should be the fucking mic drop. That should be. 13 months ago, this clown was saying we could see margin calls any day now. And yeah, this was still before the run-up, and it did happen. But honestly, the largest grift hadn't happened at this point. This is all pre-grift. The actual grift happened during and after that June run-up, where the narrative was, this is not the squeeze. If you sell now, you will regret it for the rest of your life. You will regret it for the rest of your life if you sell now. Hold. I hold for you. You hold for me. What's your why? And all that garbage. And so this is all pre-grift.
Investment banks go under. If the big banks go under, then the U.S. government.
I don't know. We haven't heard about publicly. I don't know if we would, but the effect that these guys kept saying that the margin calls would have, even if they have happened, even if there have been margin calls that we just don't know about, even if there have been, it has not produced the intended effect that every one of these guys was saying it would. Every one of them. It hasn't happened. And they're still saying it. I mean, I would say you can't make this shit up, but you literally can and do, and they do.
Pretty much has to bail them out to keep the entire economy from following close behind. So I think the way the government steps in this case is just to use the printers. Okay, so I was told last time that I made a mistake and I didn't tell everyone to like and subscribe. That's a YouTube thing. So yes, please like and subscribe. Also visit my Patreon, patreon.com/HoustonWade. There will be a treasure hunt this summer that I am setting up, and the clues will be in my podcast. It will be announced on the Patreon first. And
a treasure hunt in your own fucking podcast. Involved. What a cool fucking guy. He's a narcissist. Yeah, I don't care for him. Right, so oil's nose diving. I mean, it's only down a couple bucks, but I mean, and it's still up from the last closing, up 0.5%. But and it looks like it's going to take equities with it. We'll see. Now I know there were other new stuff that came out that I was sent here. Oh yeah, no, New York Angelo. Angie. Angie. Yep. Kiev Angelo. And there, yeah, none that had a price effect for AMC. Certainly not the intended thing. And by the way, too, you know, margin call and being forced to cover are not really the same thing. So, you know, I don't really know what use of margin call is in this scenario anyway. What you want is you want the shorts to be forced to cover. And the apes think that there's a difference between covering and closing. Okay, whatever. But forced to cover their short positions means buying them back. Buying the shares back, returning the shares, closing the position. It's the same damn thing. So, I mean, we know that. See Angie. Kiev Angie. Attention apes. So he's put out 2 videos today, it looks like. 2 videos today. Here we go.
So what we're up to this trading week, unfortunately we have to wait all the way until Friday to receive.
All the way until Friday, okay.
Receive some release because the CPI data report will be released on Friday. Usually it's Tuesday or Wednesday. So we have like 1 or 2 days, the first 2-3 days of the trading week, right? We have some uncertainties, some sell-offs.
Yep, buy calls on my internet. Excuse me, buy calls on my internet connection.
We're seeing some reversal and some consolidation on the market. Unfortunately, the whole week that is coming ahead, Monday till Friday morning, we most likely we're gonna see deep red sell-offs. And the point over here is that the forecast that is already out there is for 8.3% inflation in May, which is not a crazy difference from April's one, but the point over here is that rate hikes are already here, 2 of them, and there is no such a big difference. What this actually means, well, more and more famous and rich people will start bullying or keep bullying Jerome Powell, saying that, you know, nothing has done appropriately about fighting inflation, and he's gonna get angry and pissed and potentially on the next meeting, which originally everyone was talking about, you know, each meeting coming with another rate hike. He's gonna get tougher and tougher every single meeting ahead. What about AMC? Well, the famous rule that, you know, supposed to change the game in the first couple of days in June will be published on public register tomorrow, right? And this is important because there are a lot of people waiting and hoping on this rule. Let's wait and see, is there something behind it or there is nothing behind it? Something very interesting is coming on Wednesday. We are going to take a look on the mortgage applications report, which will indicate where and how fast the real estate market is seeing a drastic decrease of the demand, especially with the higher and higher mortgage rates that we're seeing is getting killed day by day. So Wednesday will be very, very interesting day for everyone who is interested in the real estate market. Thursday supposed to be a boring day simply because we are going to take a look at the initial job claims, something definitely boring, but Wall Street is paying very close attention to this. So like you can see over here.
Here's a conspiracy theory. Moass, the idea of Moass was a PSYOP campaign. I don't know where, I don't know from whom. It could be Russia. Or it could be from Wall Street itself. Could be from Wall Street itself. The purpose of which was to sow these seeds, short sellers, but from retail to short sellers, to set up this divide, to set up this false dichotomy, this false narrative of hedge funds are trying to bankrupt these companies that retail investors love, when in reality they were just setting up a good trade based on the pandemic and brick and mortars closing, to sow these seeds of discontent between hedge funds and retail, because they know that retail are uninformed. They know that retail trades with emotions. There's literally a channel called Trading with Emotions. And what it did was it created this hatred towards short sellers, not only short sellers, but short selling in general. So what you have now is you have a market crash, market correction, deep correction, where most retail investors, especially the apes, but retail investors in general are not sophisticated enough to short stocks or the market. So you have this, deep embedded hatred for short selling. The apes and retail investors in general will not short. They won't short stocks, so they won't make money. That's the best I can do. But I don't know, because it was certainly pushed by the media. There's certainly some truth to the fact that these short squeezes were so public. They were so there was so much awareness around it last summer, last summer, that whenever you have something that everybody's on the same side of, that's a sign to be, concerned about it, to look at the counter arguments and to say, all right, everybody's bullish. Should I be bullish or bearish? And we saw that recently with the market. We saw it with the market. We saw it happen, on both sides of it last couple weeks, last few weeks, last couple months. So, but, I don't really believe that. But, I think that I could make a better case for that than these guys could at this point for a massive short squeeze to happen. I think there's probably some, some evidence that might support that, or you could feign it, but it would probably be a little bit more believable at this point. At least it would be something different than the same old shit. And yeah, I mean, not only did the COVID close down these businesses for a time, but also, yeah, they were not doing well before. And I responded to some ape on Twitter today talking about GameStop, and they, it was the same old shit. GameStop's revenue was up, bro. What are you talking about? GameStop's revenue was up quarter over quarter, month, year over year. But their margin was down. Almost a lot of people's margin is down because of the inflated prices for everything. So there's a reason why Aron hypes the revenue is up number. Anyway, yeah.
There is every single day except Monday, except tomorrow, a reason for Wall Street to crush the market, to bring another sales, 4, 5, 6%, probably pre-market 2, 3%. We're gonna see, the futures, what will indicate tonight, but still, guys, nothing positive seems like this week it's coming around the corner for a general market. What this all information actually means, well, every week we're following with different hedge fund performance or hedge fund losses. I mean, this week, if this actually projection filled up the gap of missed expectations from the Jerome's Powell rate hike, if we actually missed the job application claims, right? If we actually have less mortgage applications as well, well, this will prove the point that the sell-offs will continue. This will prove the point that the people who have been calling for the biggest stock market crash, Mr. Kiyosaki, Michael Burry,
yeah, Kiyosaki, he's going to be right.
Bears will have a couple of weeks. And seriously, if we want to put things into perspective and try to see when things will actually change, definitely will be the moment in which we see the huge drop of the inflation level, right? From this 8% that are on the projection for a report on Friday. How about having a month, let's say, August, having like projection 7 and to hit 5 or 5.8, like huge difference, right? This will bring so much positivity and motivation and trust on the market. This is, in my opinion, probably one of the best indicator that will actually flip the coin and squeeze a lot of shorts on the market. Some crazy event that is not expected, that is way off any price target, any price move, any percentage that was set as a level for the previous month. This is the main catalyst in my opinion, guys. Follow up with the inflation and follow up the difference between the projected levels of inflation and the real inflation. Either way, short squeeze plays in my opinion are still the only stocks that
there we go.
They don't need Jerome Powell. They don't need lower inflation. They don't need stimulus checks. Right?
Oh, really?
The only thing that they need is to see the short sellers squeezed from the natural market conditions without any
from the natural market conditions, meaning literally the stock market correction that is underway right now. That will cause a squeeze. Let me tell you. That's how squeezes are made. Markets go down. Right.
Interference of the third parties, right? Fair market. Probably this is why Kenny's largest position was puts on S&P 500. It remains to be the largest position. So I guess he's on the same side.
I don't know if that's true.
This is what the market is set to present itself as an opportunity this week. Let me know what do you guys think about it. Is there any event that I actually missed and you are very bullish or bearish on it this week? Subscribe to the channel, guys. Like this video and come back for more.
Yeah, I didn't get too much out of that. See here. Lag hacks. Lag hacks. All right, lag hacks it is.
So what you guys should be looking forward on Monday, I'm going to go ahead and talk about in this video. Before I go ahead and jump into the video.
Oh boy, here we go with Ortex again. And I said this, I think it was on Frank Nez video, which, you know, man, you want to talk about some nonsense. But he's like, look at the data. Look at the data. The data, you know, the data. And what data he's talking about is Ortex, right? So my comment was, look. You're using one source for the data. I got to find that comment from S3 Partners that destroys, well, doesn't really destroy Ortex, but it kind of, you know, it casts a lot of doubt on their methods. I'll find that while this is playing. I have it on my other computer tab open. But one source, and it's everything. Like that's another red flag. Another red flag. I use multiple sources for charts and indicators. I don't use one of anything exclusively. If for no other reason, I want variety. I want to see it different ways. I like different aspects of different things. I want to see all the different possibilities. Using this one source for this is literally pigeonholing your knowledge based on what one source is telling you, and they know it. They know it. Ortex, crazy.
Like button and comment down below AMC would help push out this video to other investors on YouTube and help push AMC overall. And consider subscribing if you're new. Now let's go ahead and talk about the Ortex data. First things first. So again, free float loans sitting at 35%, shares on loan 180 million. These two numbers are continuously increasing. They're going very aggressive with their shorting as a recent hedge funds. Not sure what the game plan here.
So really the only data that's short data that's actually meaningful, the only data that's meaningful out of all of this, and it's not even shown on here anymore, is the exchange reported short interest. And it's out of date, but it's the only actual objective measurement of short interest. All these estimations, the estimation is an estimation. The number of shares on loan is not the same as a number of shares that are sold short. So we don't know really what it is on any given day, except once that exchange reported data comes out, we know that it was this at this time in the past, which is not really that useful, but it's the only objective data that really exists that's not estimated and based on a limited set of data. Okay, and that's what this whole thing is built around. All this hype about 100% utilization and all these shares on loan, it's all based on what one person or one firm, one paid provider of data is providing. I mean, that to me is pretty whack. I would be looking for different data that would either confirm or disconfirm. Quote, what's his name? Brandt from The Big Lebowski. What our assumption is. Like, why doesn't anybody think that is a good idea? And why does everybody think it's a good idea to use this flawed Ortex data? I don't know. Because I do know, actually. Because it's more confirmation bias. It's easy. Easy confirmation bias.
The cost to borrow continuously increases. This is a number hedge funds cannot escape. We already talked about this before. Even the synthetic shares that have been sold to retail.
Oh my God.
And those shares that have been lended, these hedge funds still have to pay the cost to borrow.
Lended? Okay. Show me a synthetic share that's been lent, and I'll show you a cost to borrow that is laughably low. Okay?
On it. So, for example, if a synthetic share exists and some retail holder has that share, which has been lended out from that holder, he's still getting the cost to borrow. So this is a number they cannot escape if that so-called share that they have shorted, the fake share, is actually held by a retail investor. So not sure what the game plan here is. This is hurting every single synthetic share out there that is owned by a retail investor. Now I wanted to go ahead and talk about this.
Look at that. That's crazy assumption right there. That to me is that's some of the worst rhetoric I've heard, honestly. The way that was all wrapped up together. Like, there's no question about any of it. There's no question that these quote-unquote synthetic shares, which there aren't even really real shares. There are no shares. It's all debits and credits in accounts at the DTC. That's all it is. So when you say synthetic shares, what they're really saying is that if you look in all the accounts that hold that equity, that security, that stock at the DTC in their master system, if you added up all the holdings among all the holders, it would add up to more than what the float is, which is true. It would be not because of synthetic shares, but because of the nature of short selling anyway. But that's a temporary increase, and it's always in motion. It's always fluid. So that's not an issue. That's short selling. The float would appear to be larger. If you add up all the number of long positions that exist, it would appear to be larger than the float. But, I mean, and Manny's got, the ridiculous nature of this here. The ridiculous nature. They can create a fake share, but can't avoid paying high cost to borrow interest. Now, think about that. The reason they would create a fake share is because they can't or don't want to borrow a share and pay the exorbitant cost to borrow fees. But this guy just said that they still, even if a fake share has been handed out and now it's being lent out again, now they have to pay the high cost to borrow. Really doesn't make sense. Like I said, shares are just debits, electronic debits and credits that, theoretically would add up to what it should be. So you could figure that out. Here's the float, or here's the total number of shares that are out in circulation for regular people to trade. Here's the number of shares that have been lent out and sold short. So if you add those together, you should get a total. That should be the total long positions. It's not that hard, but it's not something that really most people would worry about. They would just trade it and go with whatever, you know, or buy and hold it for the long term. But all this detail focused on these inane details, it's just, it's really missing the point of the whole thing. Not to mention the fact that there's no evidence for any of this fraudulent activity. I mean, you're literally accusing the custodians of all positions, of all stocks and stock positions, the custodian, the master custodian that handles the clearing and settlement and custody of stocks. You're accusing them of promulgating fraud and saying, literally, it doesn't matter how many shares they're supposed to be. They just create them whenever they want, whenever they need to. That's a little bit too far for me personally. If that's the case, why are you even participating in such a fraudulent system? Synthetic shares are lended. Real shares are lent out. Oh, shit. Oh, man. That's fantastic.
Since
Leave
we know
that
the
up there
cost of
for a
borrow is
while.
exponentially
Shit.
increasing. As we talked about this, the price for short volume, the cost of borrow will always increase as long as we are below zero on this graph. So zero right over here. Since this graph over here is below zero, the cost of borrow will exponentially increase. They have to eventually break out in order to free the cost to borrow. It's just going to keep getting worse.
That makes
and worse.
no
and
sense.
So far, they've had a couple of attempts here. I mean, I thought
that's complete. I don't even know why. That's not. Short volume has nothing to do with short selling as far as borrowed shares. It's not the same. I mean, he's saying that I don't even know what the correlation he's trying to make here is. But this is stockgrid.io. It's been misleading since the first day they put out this crap. It's literally useless information, and short volume is not really telling you what you think it's telling you.
this would definitely break out, but they decided to go ahead, keep the shorting up, brought it back down, and as you guys take a look here, cost of borrow is 14 right now. Would not be surprised to see about 17, 18 in the next couple of days, as long as this graph continues downward. So worst case scenario, it continues downwards, cost of borrow gets worse, you know, free flow and loans going to increase. It's just going to get worse for hedge funds overall. So this is something they have to break out of.
Yeah,
and
you know what? There will be a short covering rally like there always has been. It's been a while since I mentioned this. There will be a short covering rally like there always has been this whole time. I don't know what the apes think that these rallies are, but, you know, we know what they are. And just like every rally in the past, it will be sold off because people are trying to get out for a non-zero price. It's classic. It's clear. There's this massive overhead supply of bag holders that are trying to get out. It's you know, there's really no other explanation. There's no two ways about it. It's a one and done event. This was the impulsive move last June. Everything afterwards is the ball bouncing lower each time, but you know, this is how this goes. And it's basically, you know, reverting back down to where it started, back over here. And that's it. You're not gonna break through. You're not gonna break through these bag holders and the overhead supply. It's just not gonna happen. It hasn't. It is less likely each time. And I would say, realistically, I would say $20 at this point. You'd be lucky to get there. Be lucky to get there. This last one was pathetic. This last one was so pathetic. I mean, it's laughable, really. You know, March was a decent little move. You could have traded this on both sides, or, you know, used this to get out. But this most recent one It's pathetic. Absolutely pathetic. Laughable. That's laughable, man. Okay. All right, lag. Let's go.
We got right over here was them resuming the squeeze cycle. So 3 days in a row, we've had short volume percentage at 40%. As I said, a squeeze cycle has to last a month. The last time it was over here was 7 days. And it's been at the squeeze cycle for 3 days now. And I know AMC stock price hasn't exactly reflected the squeeze cycle, but you have to keep in mind, Citadel does get most of the AMC orders routed to it.
What the
and
fuck?
since they can create order lag, that means they can fill the sell orders.
Order lag? What the hell? Okay. Obviously, these guys have never watched the tape while they place an order. Buy a share on Robinhood and watch the time and sales window, the live time and sales window on Fidelity or on TD Ameritrade. You will see your order. You will see your order. It gets executed right then. So this lag nonsense. You know, what the deal is that they're short selling, they're naked short selling it to you legally, and then they turn around and buy it. They turn around and buy it, or it happens at the same time. But this short volume is not anything. I don't know what the hell he's talking about. Squeeze cycle? No, that's not short volume. That's a lack of understanding, a lack of research. I have a video on short volume. There's other resources too. Squeeze metrics, short is long. Google that. But I mean, this is not
immediately
anything.
They can delay the buy orders. It's not a good assumption that AMC stock price will start going up immediately when the squeeze cycle starts. The squeeze cycle has already started since the last 3 days, in fact, and AMC stock price hasn't exactly moved. And another good bullish indicator we have.
I'll tell you that. The squeeze cycle has started. Yeah, That is the dumbest thing I've ever heard. Do these people not even look at charts? The squeeze cycle has started. Okay? All right. Because of short
confirmation that
volume.
squeeze cycle has started is the rolling 20-day position. So let's take a look here.
Wow, this guy is way too invested in stock grid.
Generally go up, right? The major squeeze when it happened the first time, rolling 20-day position was absolutely killing it, right? Going down steadily, and AIM stock price jumped a crap ton. Now, this is not always the case, but the general trend with the rolling 20-day position is a negative slope and below zero equals bullish for AMC. Right now, we have a negative slope.
Well, if it's not the same, what does that mean? How is that possible? Okay, whatever.
Zero. This line has continued downwards because they seem to not be covering at this point in time. Not sure what the game plan is here because they're still paying the crazy cost to borrow. So with this rolling 28 position go downwards,
another person who thinks that all the shorts are going to cover at once. That's all I can think of what he means by that. But I mean, shit. All we have to do is go back a couple. You can see these return shares coming in like crazy for. Come on. Come on. Come on. 4 million on Wednesday, I guess. And I think this has to be you have to think about this relatively. Must be the second. Must be the 31st. There's another 4 here, I think. Yeah, so there's 4 there. 4 there, so almost 9 million. And you know, again, this is one source and everything, but you can generally deduce from that a large number because it lines up with the chart. 2 days last week, these days right here. That's what you're talking about. That's what you're talking about. These days right here. And of course, the volume was, well, let's see, 53 million, 71 million, 89 million. So clearly these 4 million shares each day was part of it. And there are other reasons, but basically, yeah, it's all institutional buying, covering, FTD closing, not natural buying. It's not positions being accumulated like Rico likes to claim. It's just the institutions playing around with the apes, really, essentially. Oh well, and also, of course, making money. They're making a shitload of money. So
over here, it is a good indicator for AMC, and since this is more of a forward indicator, it is very, very likely that we are going to see some good AMC movement, but not immediately, because we have entered a squeeze cycle 3 days ago. Rolling 20-day position is bullish, and price for a short volume is also pretty darn bad right now for hedge funds, right? They're having to pay a lot of cost to borrow. So why is the AMC stock price staying down? And it all comes down.
Was it like 0.003 of a cent per day or something like that? It's
order
not
lag.
much.
This is the only explanation that I can think of, or creating more synthetics. But even then,
that means nothing. It's the only situation you can think of. Yeah, because you're what, 23, 25? You have no experience whatsoever. You started your YouTube channel this year. I'm sorry to be so blunt, but just because some YouTuber can't think of it doesn't mean that the fucking apes are going to get rich. it's like that cannot be an acceptable reason. It cannot be.
Just based on the actual numbers, order lag seems more plausible. So I wanted to go ahead and say this, right? The rolling 20-day position, it can give you a bullish indicator right on point, right? So over here, the rolling 20-day position goes down. As you take a look here, AMC stock price actually goes down for some time, and then it heads back up. So even though the rolling 20-day position was going down the entire time, the stock price had a general uptrend, but it was not reflected completely in the movement. It was a small red candle, a big green candle, small red candle, a much bigger green candle. So overall price direction is usually bullish at this point in time. So AMC is looking good for maybe
another fucking believer in a cycle.
We have to expect a good bullish uptrend soon. Maybe not tomorrow, but I am getting pretty bullish on AMC.
I'm not going to go back through this guy's fucking videos. 62,000 subscribers with this bullshit. But I mean, how many times, how many weeks has this person said, "Oh yeah, it's a pretty good uptrend. Should be starting soon. Should be starting soon. Free beer tomorrow. Free beer tomorrow." You know, just if they can reroute orders, who's to stop them? They control the squeeze, not us. And I believe they have more money than all retail combined. Well, no fucking shit they do. You're just now realizing this? They're borrowing from their friends, likely not even paying the cost to borrow. This play is about hedge versus retail. I agree with that. This play is retail versus the government. Well, I don't agree with that. It's retail versus themselves. It's retail versus the fucking charlatans. See it how you want. I stand with AMC. Yeah? You stand with the bag holders. Bag holders. I mean, seriously. That's all you got. See it how you want. I stand with AMC. You use another one sourcer.
I would say $12 would probably be support. And if you guys are looking for a good buy-in, I'd say $12 is a good deal at this point in time. So that's all I have for the video, guys. Thanks so much for watching. We'll see you guys in the next video. Peace out.
Terribly bold. Just ridiculous. Yeah, $12 is a good place to get in. Uh-huh. Jesus. What else we got here? I mean, there's, the stimulate and trade puts out like 2 or 3 minute videos, just like little shit nuggets, basically. Where's the Frank Nez? Oh yeah, Andrew Moe. No money. No money. I'm gonna be shutting the stream down at 10.
Hedge funds.
That's my plan.
Are burning through cash trying to keep the price suppressed. Their manipulation and algorithmic control.
I love this too. Burning through cash to keep the price suppressed. How does that work exactly? I'd like an explanation from this data scientist. Can the data scientist tell me? Burning through cash to keep the price down. How does that work exactly? I just want to make sure that they understand what they're talking about. We'll find out, but it's on Reddit. I guess I could look it up, but probably already gotten too dumb from this shit tonight. Uh-oh. Now things are starting to come back down to earth. Well, we'll see. That's about all I got to say on the futures. We'll see.
Can you read that, Moon Platoon? It is the taste of liberty. What's going on, guys? This is a real silver dollar, which I will be flipping at the end of this video because I promised that in the last one. How are you guys doing?
He can keep that kind of promise. That's awesome. You can keep that promise that you will do something in the next video.
I
like
wanted to
flipping
know
a coin.
if you guys are ready for some DD this weekend. The coming horrors awaiting shorts part 2, power to the players, as well as a hot mic with a formal Citadel's client and what they talked about Ken Griffin. Is he now running on fumes, and is the end coming? I want you guys to know that a bunch of you have already gotten my 6-figure portfolio just by asking nicely and by sending a very nice message on Instagram. Over on Joshua Lee, he said, "Watched your song, was epic. The message gave me more hope than I could have hoped for. I don't need to see your portfolio, just happy to talk through another ape." Over on Izzy, they said, "I'm sending you apes together strong for access to your portfolio. Also, your videos have been a huge help. Didn't think that'd be to understand trading
Apes
at all.
Together
but you've made
Strong.
it accessible." I want to thank both
Is that
of you.
that shitty
They're both
documentary?
getting the portfolio, like it or not. But if you guys haven't
They
yet,
made
watch
that?
that video, because at the end of this one, I'll decide with a coin flip whether or not it gets.
How apes together strong? What? How could... I'm not even gonna...
delete it. So make sure that you have already slapped this like button nice and hard, and make sure that you have
I'm sending you tickets to Ape Fest as a token of my appreciation.
Like you guys are, all the way up to 1600. Too long didn't read. Recorded call with former Citadel client reveals Citadel has been underperforming and may have been cooking the books on their finances. Further evidence show that Ken Griffin was desperate to hold on to his clients' funds and was ferocious towards anyone that left him. And this is going to be part of a longer burning cash DD post where they explain how Citadel is just a handful of clients that they provide them with the necessary capital to operate. So let's start with that DD really quick. We'll breeze through it just in case you haven't seen it. This is from a couple days ago. Too long didn't read. Every day, as short hedge funds are burning through cash trying to keep the price suppressed. Their manipulation and algorithmic control can only go so far. As DRS,
well, there we go. That's the $1 million line right there. Their manipulation and algorithmic control can only go so far. Oh, really? How far is that? And you know, if it can only go so far, why has it played out the way it has? Clearly, it's far enough. If this is if this is as far as it can go, how is this not far enough? Makes no sense. Is this a super stonk post? Kind of looks like it.
Is actively accelerating the speed at
Yep,
which
it is, because our billion publicly supporting GameStop. I mean, who's more delusional here? The GameStop apes or the AMC apes? I don't know. Are they equally as delusional? They kind of like fight like brothers and sisters. But they both had the huge impulsive moves. They had the bounces, the lower ball bounces afterwards. Well, what, you know, but they both think that randomly, defying the laws of physics, that there's going to be a random huge bounce, all-time high bounce of the ball for no reason, defying the laws of physics. I mean, that's essentially what is going on here. Unbelievable.
Short hedge funds burn through their cash. Loss of short hedge fund financial support, DRS efforts to lock the float, etc. all contribute to the immense cash burning dead end short hedge funds will face.
Okay.
Recommended prerequisite. Here are some 3 more DDs, due diligences. So, part 1, everything burns. This hasn't gotten talked about much, but they think the global effort to spread awareness on the criminal acts of Ken Griffin has been working, as Citadel definitely took notice in the past. 8 months ago, they published another article about how Citadel is probably freaking out on Twitter, speed running all 7 stages of grief because hashtag Ken Griffin was
they're trending. Using their own article that they published. Okay.
on Twitter. And you had plain banners flying out exposing Kenny's corruption, so they could...
Who cares?
Imagine
means
clients were
nothing.
getting anxious and wanting out. Well, let's see then. Prior to Citadel, advisors form ADV filed on 5/27/2021, they had a total of 19 clients. Remember that each of these 19 clients is a very wealthy individual. The money that these individuals provided is what made Citadel's margin, emphasis on made. That's because on ADV filed in May 27th, 2021 showed that they lost 2 clients and were now down to 17. Alright, so they lost a few billion there, but Kenny had to make trips around the world to convince these wealthy aristocrats to stay invested. Were his efforts enough? Not exactly, because in the next one, you can see that he's now down to 16 clients. So since the January 2021 run-up, 15% of Citadel's clients have left, and who knows how many are still remaining. But they are actively withdrawing money every month. And guys, remember, this is important because we have seen Citadel bail out shorts in the past, like Melvin, for example, who just got dumped. If you guys haven't seen that video, it's on the channel. Make sure you guys have already subscribed and hit that bell button so you guys don't miss out on another announcement of when a margin call squeeze is coming. So they can imagine a lot of clients are fed up with Kenny and actively withdrawing chunks of their...
Yeah, no. You have no idea when a, quote, margin call squeeze is coming. What does that even mean? You mean a short covering rally that will inevitably fail like all the other ones have because you have this massive overhead supply of bag holders who are happy to get out despite what they say on Reddit and Twitter and in YouTube comments. They don't want to hold it to zero, and they're not going to be able to hold until zero. The way that shit is going, even if it were to stay the same for the rest of the year, it's probably likely that they couldn't. They need money. People need money. They don't have literally cash to burn like they did last year.
Their money every quarter, which would explain why Kenny resorted to degrading apes in an interview with Bloomberg, saying that apes are going after teachers' pensions. We covered that as well. That was pretty ridiculous. How much money has Citadel been losing? Definitely billions. They can't give an exact estimate because they don't trust their self-reported balance sheets, for as we have seen in the case of Huang, who was recently indicted by the DOJ for...
So you can't give an estimate of how much they've been losing, even though they've reported. All companies self-report their balance sheets. I mean, this is nonsense. So you're literally saying, yeah, they reported they reported profit, but I don't believe that because I know that they're corrupt. I mean, get the fuck out of here. This is DD. This is not DD. It's fucking circle jerking. It's circle jerking, and the dog is sick of it. He says, I thought you were a scientist, Dad.
Artificially inflating his portfolio from $1.5 billion to $35
You're a charlatan.
Yeah, that's an easy mistake. Yeah, sorry, just 20 times more than I thought. Oh man, just forgot to carry the zero. Forgot to carry the 20. Citadel got $1.15 billion bailout from Sequoia in January this year, which should tell you everything you need to know about the current situation, especially considering that Citadel was the one bailing out Melvin Capital a year ago. Hey, I said that. That's what I said. Citadel's office went up for lease as well, so they're really scraping under the couch cushions to collect as many nickels as they can to survive a little longer until they have no cash left to keep down the mother of all short squeezes. As financial terrorist Kenneth Griffin said it best, each thing we did bought us one more day. Do note that as time goes on, short hedge fund margin
Amen to that.
Because they continue to burn cash every week that goes by.
A lot of meaningless conjecture.
Ways of price suppression, can kicking,
fucking verbal diarrhea,
loss of funds from client withdrawals, etc., all cost them significant amount of money each week. Keeping the price suppressed for this long is unsustainable and constraining.
I mean, I would love. I can't wait until there's some kind of disclosure, something comes out, or whatever that comes out to prove that Citadel is not even shorting these fucking stocks now. Because we don't know. We don't know that. All of this nonsense, time, energy, all of these, essentially years that are taken off these people's lives. Not the influencers. They're doing fine. But the rank and file, AMC and GameStop shareholders, the ones getting fucked hard. This is all based on faulty assumptions that have never been demonstrated. And I mean, everything has moved so far past the basics that nobody's thinking about the basics, but the basics were never really proven. They were never proven, and everything was built on those assumptions. And I've said this many times. I'll say it again. If your whole thesis is built on assumptions, or worse even, your thesis is built on assumptions that are built on other assumptions. So you're stacking assumptions. The more assumptions you run off of, the less likely, whatever it is, the underlying truth, the less likely that is to be true. Period. One assumption, one major assumption is bad enough. You start stacking these assumptions up, basing it on, oh, I think, I don't trust, I don't feel, etc. You're fucked. You are fucked. You are running on chance and not a very good probability that your flavor of delusion, your flavor of speculation is true. It's nonsense. Come on.
Because short hedge funds
Ridiculous.
give us a free 99.9999% discount on the shares that we are buying, and they have to pay for it all. For them, it's pure agony. So it's safe to say that since their margins are decreasing, the critical margin levels where they'd get margin called would consequently decrease as well. This is visibly seen on GME's chart. So there it is right here. This is from April 1st, 2022. You guys are seeing this descending levels of resistance and support for the same levels that they are able to critically short, because their margins are getting way too strained. This chart is a bit obsolete
Makes no
since March,
sense.
but if we want to include the last 2 months of data, it would still follow the same pattern. In fact, March 29th, GME touched critical margin levels around $200 indicated by the chart, got halted and went straight down. The highest descending line in
Yeah,
the
see,
area
that's
is
a
the short hedge fund.
mischaracterization right there. That is a mischaracterization right there. Factually incorrect. Same with AMC. It didn't get halted on the way up. Got halted on the way down. I mean, it's basic. That's objective. That is objective. Got halted on the way down.
Funds need to keep the price suppressed to avoid critical margin levels getting breached. You can see back in March last year, for example, critical margin levels would have been breached if GME broke past 350. Nowadays, it's around $200. If GME were to break around $200 and at least consolidate around the mid $200 level, margin calls would ensue. Mid $200 was the price that could afford GME to touch.
Essentially not going to happen for the same reason it's not going to happen on GameStop. Because you have a massive overhead supply. Massive overhead supply. Nobody bought GameStop anywhere back here. Nobody. Not one share was sold at these price levels. Not one share. You have this move up. That's the impulsive move. That is the move. And you have people buying all the way up. Phone kicking in. They're happy to be in. And you have the influencers telling people to hold. And what do you have after that? You have these bounces, like the bouncing of a ball. And people are trying to ride this wave every time. Yet the bounces just get smaller and it drifts down. Because now, like back here, you didn't have anybody at these levels. Now you have a ton of people at these levels. So what happens every time it rallies up close to those, what happens every time it rallies up close to those levels? Of course, the rallies fail because you have this overhead supply looming here, waiting to get out with as much of their initial investment as possible. So every time you have a rally, it sells off, it sells off, it sells off, it sells off, it sells off. And yeah, you might have another short covering rally. That's a little bit generous. You might have another short covering rally, but It's going to sell off. There's no question about that. It is not going to do this again. That's not how this works. There's way too much here in this overhead supply. Way too much. Way too much. So if and it's really no accident either that these first bounces were larger. First bounces were larger because this was in 2021. There was enough money. People had the savings. And they could literally burn it, to use Andrew's analogy. They could literally burn the cash. But now, well, in case you haven't noticed, it's a little different out there. It's a little different out there. People don't have the money to burn. Meanwhile, you know, oh, GameStop's earnings, you know, they're so wonderful. Well, actually, their profit margin has decreased over the last couple quarters, and you wouldn't tell that. We wouldn't be able to tell that from this. We'd have to actually go in and read the balance sheet and the financial statement to see that margin is down, profit margin, because of largely because of inflation, but also because of inflation in terms of, you know, who's buying shit from GameStop and all those concerns. So it's just, you know, it's a false narrative. It makes no sense. This is basic psychology, really. Overhead supply that's looming there. It's waiting to kill any rally because these influencers have misled people and caused them to hold way longer than they should have. Period. That's the problem. Because now, plus, couple that with the shit economy that we're in, the looming recession, yeah, it's going to pop up and consolidate at 200, 300, whatever the hell they said. Not fucking likely. Not fucking likely.
They have to have a lot of money. Hashtag leeway back then. I'm really just looking for a new margin call range, and Marge will call. They know that apes will be thinking about short hedge funds will never get margin called or can just refuse to respond. But if that were truly the case, IBK, our chair Petrify, wouldn't have to be so afraid back in January last year, saying that there was going to be some massive waves of bankruptcies had GME's price continue to rise, had Melvin not get bailed out by Citadel, and they had to close out their positions, not just covered. Quick note, based on the difference between close.
And there's more of that, you know, made up nonsense. They're claimed to be quoting Investopedia here. The act of covering does not necessarily mean closing the position. That's not from the short covering article. I'm not sure what that's from, but cover is to take a defensive action to lower the risk exposure of a position, investment, or portfolio of investments. So, yeah, no, that's not from covering and closing a position. No, we're talking about short positions. I don't know what this is from, but there's one action, buy to cover, which literally is buying a share back, period. This is a made-up dichotomy.
Closing and covering, so this is the education you guys are probably
education.
Thinking
Let
in
me
your heads.
educate you with some nonsense.
says the act of covering does not necessarily mean closing the position. To cover is to take a defensive action to lower the risk exposure. It's about exposure. Investment or portfolio of investments. Close or closing, in contrast, suggests the risk is being fully eliminated. Short hedge funds have million-dollar lawyers that use specific words for a reason. To be vigilant on their wording, so you'll never hear Melvin's people say closing their positions. Now, theoretically, they could have continued aggressively shorting and ultimately seller boxing at GameStop, but apes came along, as well as RC, DRS, and also GameStop has over $1 billion cash on hand. That's pretty much over. But let's see.
It's not over.
Wall Street Crime Club losing support. Jonathan Farrow, an anchor on Bloomberg, said openly on TV that he didn't agree with the thought from Ken Griffin that apes are making teachers lose their pensions. They like to say, I
think I remember seeing that on
Bloomberg
surveillance one morning.
work on Monday. A few days later, Tom Keene is reported on WEF in Switzerland with a different anchor, and Jonathan Farrow isn't there. They mention he's on a different assignment. How convenient he's off for the week. But here is the clip that Bloomberg removed every single one of Jonathan not being there. So that's a little suspicious. This video is going to take us too long, but they essentially edited him out. It could be a total. You see what Cramer has to say about Citadel. Oh, now we're getting into the
yeah. Now we're getting into.
If you guys got to this part of the video, make sure to comment out right here about why you guys are holding, what you guys are hoping to do, and where you're from. I'm interested in learning about more what you guys are part of. How are you guys involved?
Yeah, right. You just want people's fucking money. You just want people's fucking money. Just like all the goddamn... Oh, look. $99.99 a month. How many people subscribe at this fucking level? Seriously. $49.99 a month. Monthly private live stream. Access to my 6-figure investment portfolio. Moon Platoon, $7.99 a month. Name and credits of each video. I need that. Mo Monkey, $3.99 a month. Loyalty badges, custom emojis, random shout out. I have not heard a random shout out to anybody ever in his fucking videos.
Involved with this. And now let's listen to what Jim Cramer has to say about Ken Griffin.
Cramer, as always, good morning, Jim. Your piece on Citadel, very interesting. How conclusive?
Citadel's absolutely in great shape.
It is, but how conclusive can you be?
I just want to make that point right up top.
Okay.
Matter of fact, I want to throw money at them viral.
I mean, what is it with these guys? And, like, can they not successfully do audio? Like, we're listening on his laptop speaker. It's annoying. Who else did that? Somebody else did that recently. They all do it. Trey did not do it. Trey did not do it. To cover the exposure of broker leveraged funds. Which, I mean, correct me if I'm wrong, that's not the short positions themselves. It's not a valid action on a short position. Crypto rallying. Symbol correctly. Yeah. Is it taking? Oh, is it taking equities with it? You try to catch these types of things, and oh yeah, it kind of is. Not taking oil with it. Got our negative. Well, maybe it is. Who knows? It is until it isn't, or it isn't until it is. You know, everything is everything else apparently. But yeah, we have equities up now. Oh, 0.5%, and yeah, fun times. So maybe I should go over and buy some Ethereum. Because everything is everything. We've had, I mean, this is 1, 2, almost 3 hours worth. How did I miss that? How did I miss that? What does our bigger picture look like? Oh yeah, you may get up here, but may get up there. We'll see. We'll see. That's my guess, but just a guess.
You guys probably have seen this clip before. It is very, very much Jim Cramer feeling like he's had a little bit too much of booger sugar and talking his mouth off about how Ken Griffin and Citadel are in great shape. So you probably have seen news anchors aren't able to speak their own mind unless they want to face the repercussions. So the tide may be turning. Short hedge funds have lost their biggest advantage in the past: government complacency. In DOJ investigation of 2022, year of motherball short squeezes, they went over why Archegos owner Huang was indicted for fraud and market manipulation. While recently,
Still talking about Bill Huang too.
DOJ came after multi-billion-dollar short hedge fund Glencore Capital and forced them to pay $1.1
Crypto broke the
billion
9 weekly
fines.
red candle
DOJ
close
found
this
that
week.
Glencore also bribed judges to make lawsuits disappear. They made a DD post last year.
Oh my God!
Talked about how judges commonly get bribed by short hedge funds, and for some reason, some people thought they were conspiracy theorists for saying so. So remember that they were announced that DOJ had been seeking information from Citadel, Element, and others. One of those others is billion-dollar SHF Saganti Capital.
These hedge funds are not just short either. Like that is a, like Bad Back is saying here. They're simplifying it so that you know, the bottom barrel dumb money can understand it, but to classify, to paint all hedge funds as short hedge funds, it's nonsense. It's nonsense.
Sorry, as well as Citigroup suspended equity trading with Sangati amid DOJ investigations. Development underscored how financial institutions are taking a closer look at practices and potential risks amid a sprawling probe by U.S. authorities into how Wall Street handles block trades. Investigators are scrutinizing
they're going to crack down, let me tell you.
Investors to stock sales large enough to send prices of shares swinging, with banks including Morgan Stanley fielding requests for information from authorities. It's pretty clear now that this is more than the DOJ just trying to seek information from these short hedge funds, but possibly looking to obtain incriminating evidence to make indictments on a later date. This would probably explain why institutions may now be keeping their distance from any short hedge fund under that DOJ probe, which would be a bad look for Citadel because they're under that probe too, and anyone connected to or invested in Citadel is going to slowly be more incentivized to start keeping a distance from said short hedge fund as time goes on and DOJ collects more evidence. They'll be revisiting DOJ probe again. This is drastically different than 2008. In 2008, only one no-name banker went to jail. Here, actual short hedge fund owners are getting indicted. Real billion-dollar fines being made. Short hedge funds involved in the aggressive manipulation of GME are being investigated, and the DOJ investigation launched a few days after GameStop announced their DRS numbers. The DOJ isn't messing around here, and Wall Street is slowly starting to seem much more powerless. Around January 2021, billionaires, wealthy public figures were speaking more freely about their disdain for the aggressive short attacks and market manipulation against GameStop and AMC, but that was back when it seemed like Wall Street was losing control and criminal short hedge funds were going bankrupt. They didn't. In February 2021, short hedge funds regained algorithmic control of the stock, and most of these public figures went quiet again. So you guys are now starting into, wow, this is quite an extensive DD. So getting right here into where the fractals of the algorithm are. So let's go through a little bit of the math to try to understand this diagram here. Locking the free float. There's two different types of floats, free float and full float. The free float is the GME outstanding shares, insider shares, or the AMC outstanding shares, and the free float is the GME outstanding shares minus insider shares, minus institutions, minus mutual funds, minus ETFs. Ape rockets to the moon gives us an excellent illustration here, third bar on the graph. So GME issued shares, or AMC issued shares in the very top, goes down into the full float. This is the technical free float definition, right? And then the insiders, who get a portion of it, so 63 million to about 13 million. And then finally the free float goes, full float goes into the free float.
No, of course he doesn't.
The full float by the free float here, the 34 million, and then 20.
But he's a data scientist, so, you know, he makes sure to tell you that. I'm a data scientist. I know how to read. Okay. Cool.
Institutions, mutual funds, and ETFs. Finally, we get actual free float. From that 35 million, we get around 21 million actual.
Exit for hidden shorts.
DRS.
Oh my
from the
God.
actual free float, we get exit for hidden shorts and public shorts here, and those all make up shares on loan. That's an impressive way of locking the free float. I mean, sure, we can lock the full float, that'd be great, but we would only needed the free float. Why is that? Because we need to prove that only fake shares are left. Every single share currently held by institutions,
That is so
etc.,
fucking dumb.
in the SEC form 13F.
Like these,
this is verified.
I don't know if
ownership of
whoever
shares.
wrote this
Inside-
actually believes this shit or not. I can't tell. I really can't. Because if you were trying to confuse people and get them to believe a fucking narrative, this is exactly the kind of shit you would do. Exactly the shit. Fuck.
Insiders have verifiable ownership of shares as well. You can find this on SEC Schedule 13D or SEC Form 4. You guys have probably realized now that there has been some ridiculous changes in the sheer number of shorts here. We have about 27%. Last time I checked, is now closer to 28.5% short. And look at that cost to borrow average. Just look at the cost to borrow max. It is getting up to ridiculous costs just to continue shorting. And yet the numbers continue to rise. So,
yeah, again, on one source on
let's go down to the
Ortex.
next section.
One fucking source.
Again, the DOJ investigation this year is very different than the one compared to 2008. In 2008, nothing happened. This year, Archegos owner and co-conspirators already got indicted for fraud, market manipulation, and face life sentences in prison. Remember, the DOJ launched their investigations a few days after GameStop announced DRS numbers. They could have launched the investigation any other time, but it happened to be a few days after those DRS numbers got published by GameStop. So, they'll doubt that they highly doubt they'll lock down the float before the motherball short squeezes starts. But if we were to lock the free float, how long would it take? So they say sometime around 2023 would be when the free float gets locked, but we won't be able to make it to 2023 for a variety of reasons because it's 2022, the year of the motherball short squeezes. So that is why we have gotten a 10-minute, 14-minute actually, take a deep breath of background here. Now that they've spoken with a former Citadel client, this is what they said. Transcript from Tim Ferriss' show. What about past investors say in decades past who you've given money to willingly? Does anyone come to mind? Edward says, well, I did give money to Ken Griffin Citadel from the time it started. I think it was investor number 1 after. Oh, nice work. Frank Meyer, who was the other general partner with Ken Griffin. Frank Meyer was a longtime friend of mine from the past, so that's why I've learned about it. I actually had Ken Griffin out to the house when he was about 18 or 19, yeah, when he was Kid Genius. We discussed at some length the idea of profit centers and subsidiary businesses. I handed him a box of prospectus that was hard to get on a lot of convertible securities. These things would come out when the securities were issued, and then they would no longer be findable anywhere. They were just rare books, so they handed him some rare books and his whole collection of cartons of these things. And so they had a very good ride with him, and they finally exited recently because the taxes take a big bite out of the returns that they get. It's just simpler to invest in an index fund. They end up better off than if they were to remain in Citadel. Also, it's complicated. You get all kinds of papers. I had 4 feet of paperwork when I finally boxed it all up in the end. So, now, who is Edward O. Thorpe, PhD? He's an illustrious American mathematician, hedge fund manager, author, and blackjack researcher. He has a net worth of about $800 million and is the type of wealthy client of the 16 Citadel clients that they were talking about. So they found out that Edward Thorpe is the Citadel's client. They then got to interview him. First question, when did you leave Citadel? Thorpe answers that he exited in 2020 before the January 2021 run-up and all of the craziness that transpired afterwards. This was important to note. They later asked him, why did you decide to leave Citadel? And tell me about the stipulations in your contract. How hard was it to withdraw your money? Dr. Thorpe's testimony is a revelation that underscores the many shady practices of Citadel. They'll be revisiting it later, but just to succinctly explain, Citadel was underperforming. The returns were bad, not nearly as bad as Citadel MSM made them out to be in public, but that was pre-2021. If Citadel's real returns were terrible pre-2021, they must have been absolutely awful this year as well as last. they've been only burning through their cash. They're trying to keep the basket stocks down. So they heard that it's extremely hard for Citadel clients to leave the hedge fund, but that process takes several years to exit. That would explain why the number of Citadel clients doesn't drop from 19 to a significantly less number, like 10. Instead, it dropped in 16. They imagine the clients with several billions may have had more leeway, stipulations in their contract, hence they wouldn't have been able to exit quicker. But for more clients, it wasn't going to be as easy, though they're going to be likely withdrawing, actively withdrawing, which is why Citadel needed to cut withdrawal limits and get money from Sequoia. Then they asked Thorpe about his history with Ken Griffin. I just rolled out along with until they stopped performing well. Then I got out as quickly as I could. Edward Thorpe. They really like that quote because it should be part of the whole ad. Discussion of Citadel's withdrawal practices and their penalties. I said to myself, if they're so desperate to keep your capital, it means they're probably seeing some risks that we don't know about. Uh-oh. But you guys have known it. You guys that have been subscribed and have been part of the Moon Platoon have known for a while. He has very tight control. He's in charge. He collects most of the money and he goes after people with ferocity if they leave him. He thinks they'll take any secrets from his organization. There was more in my discussions with Edward Thorpe than they would like to share, but they were specifically entrusted to keep particular things he said solely between him and Thorpe. He's choosing to do the right thing and honor his request. So I'd like to go back to recording number 2. We have corroborating evidence from Thorpe that Citadel was producing and returns that were visually correlated with the stock market, and Citadel agreed with Thorpe's statistical analysis when he presented it to them. So, for example, market makes 3%, Citadel makes positive returns correlated with 3%. So, sound easy enough? SM articles like this that say Citadel's securities opens up after a record $7 billion windfall. Ken Griffin's hedge fund gained 7.5% April while markets tanked. Citadel security doubles net income as trading market share rises. So this now seems inconsistent. Citadel should have lost 2.15% from January 1st to July 1st, 2020. Even taking into account any fees being collected, there's no way Citadel could have been able to double its profits during the first half of 2020. It's impossible.
Well, yes, somebody's lying. Somebody's lying, or whoever wrote this cannot fucking interpret the shit. But yeah, I mean, what a dumb fucking video. What a dumb video. Look at all those awards it got, though. Holy shit. You know, that's how you know it's retarded, because it gets all the awards. It gets all the awards. I mean, these people just put the shit on there to get awards, clearly. And when I posted something, I got banned from the AMC stock subreddit. I wouldn't even dare try and super stonk. They're like the real psychos. Speaking of real psychos, what's going on with the Commander 35? Is he still out there? Or did he go bye-bye yet? Some dumb guy is whacked out. Ape Father knows his end is near. Look at all this. Fucking just obsessed with the Ape Father. What the hell? That is some fucked up shit. Ape Father's net worth, like one word after AMC squeezes. Ape Father sucks dick and robs his kids. Yeah, enjoying the final days of AMC 2 weeks ago. Good. Very good. Here he is with his fucking gun again. And this guy has got some problems. I'm morbidly curious here.
As you can quite clearly see, the ape father is sensing his own end. The end of his financial life and everything as he once knew it. You know, him and the wig are about to get royally fucked up the asshole, but you know, they both love it. Her in particular, she likes the BBC in the bedroom and he likes to watch, and sometimes she'll put on the strap on. That's the way he likes it, because they're fucking freaky, disgusting ass motherfuckers. And yeah. Where are you guys gonna run? Where are you gonna go when you see me and Chad Clifford pull up into that courtroom, fucking Rolexed out, gold chain, all that shit, diamond encrusted? Where are you gonna go? We're gonna be kicking back and having the time of our lives as you are losing every dollar to your fucking name. And I can't wait to see the reaction, the look on that wig whore's face. I can't wait to see the wig blow off her fucking head in the steam and her leave you for a fucking BBC, bro. I can't wait. Yeah! I'll see you in that court with Lou. Yeah!
This guy is out of control. It's not even what he said about the ape father. Fuck the ape father, but calling his wife a whore, all that shit. I mean, expressing this, you know, oh, we're gonna win and we're gonna see you in court and da 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 da. I'm sorry, but like, with that attitude, you will never fucking win. You are literally the definition of stupid person. You are literally the definition of a stupid fucking person. You are harming others.
This is the time someone tried breaking into my semi-truck and the C-button.
With your stupid antics, that's the definition of a stupid person, according to the laws of stupidity. That's retarded. That is the dumbest thing I've ever seen. Didn't he have an incident in a Batman movie? He looks like the Batman shooter. Very well could be. Very well could be. Man, there's not a lot of shit coming up here, like new. But I know that there is, you know, because I don't see anything from Al from Boston. I don't see a lot of, I don't have anybody over there. All right. I feel like there's one more. Oh, well, yeah, I wanted to see this comment letter from, yeah, here it is. Okay. And then, so I guess we, you know, 10:30. I like round numbers, so. So let me copy that over to myself and get this here, up here. Okay, that was me texting myself. Okay, here we go. So, we have here is the so there was a proposal, one of these rules. Yeah, Lou is giving the crazy people to go ahead for this shit, and it's, you know, it's fucked up. There's no other way to put it. It's just fucked up. So, you know, that's why, you know, if we can be as evidence-based as possible, that's the better, you know, because these guys are going off the damn rails, clearly. But, so, there was this proposal, one of these proposals about, you know, the Rule 10C1, which is for the securities lending. And this was a comment letter that came to the SEC on April 1st, not a April Fool's joke, from S3 Partners, which is, you know, I'll just read it. They're market lending financial data and technology company that provides pricing and analytics, right? We are the public voice of our industry as the only financial industry data company with 100,000 plus Twitter followers, and the most often quoted source for the financial news media such as Bloomberg, Wall Street Journal, CNBC. I think it's interesting that 100,000 plus Twitter followers is the first thing they say as the public voice, but anyway. So this is the proposal talking about shortening the reporting times for securities loans and yada, yada, yada. Okay. So there's one section in here that is relevant. So it talks about the current state of the lending market, securities lending market. They talk about what they offer, short interest, financing rates, crowding indicator, that's what S3 has. Leading indicator provides a measure of shorting and covering events relative to market float and predicts movements in short interest in near real time. Be interesting to see that. Days to cover. Okay, so the proposal increases the scope of securities lending data that lenders will be required to generate and produce, and imposes a 15-minute reporting deadline following the execution of a securities loan transaction. And this is interesting. We asked the Commission to consider whether the expanded scope of reporting coupled with the 15-minute reporting deadline could create a, quote, game show effect, where lenders scramble to nominally comply with a rule for fear of penalties, but at the expense of data quality. Game show effect. The give to get model. They agree with the Commission's concerns regarding the inadequacy and information asymmetry issues inherent in the give to get model, where different data sets are available to broker-dealers versus beneficial owners. Fundamentally, the consequence of the give to get model is an attempt to derive quality by aggregating quantity. Recognizing that this type of financial alchemy has faltered in various contexts, we've sought to resolve these issues in our products, yada, yada, yada. Okay, changes to, let's see, failing to deliver. So talking about FTDs. While the proposal states that securities loan reporting will provide indications of short selling activity, in other contexts, the Commission has made clear that securities lending in the context of failed to delivers does not always reflect naked short selling activity, or does not reflect short selling activity. In other words, fails to deliver are a broker operations issue, not a market manipulation issue. This is substantiated by the Commission in a number of contexts. On the SEC website, the disclaimer regarding fails to deliver, and then it's in Reg Show as well. The potential for recipients of the proposed securities lending tape to misinterpret the data that will be disseminated is high. As the Commission considers making this data publicly available, it's vitally important to provide the proper context. Potential unintended consequences include short squeezes like what we saw in GameStop in January 2021, since the tape could be used to promote other meme stocks. While retail investors are typically not engaged in short selling activity, if the proposal did increase demand from retail traders, that could increase counterparty risk, causing them to reduce their securities lending activities. Now there is a part where they talk about ortex, essentially. Find it. Yeah, right here. We're okay. So they're talking about the trace, which is a reporting system, or the T+1 thing. Okay. So they have a securities on loan and available to lend. They're trying to add that into the actual system that they report these on, which it's currently not. We're concerned about the subjectivity of these fields and concerned they may be misleading. Securities on loan is a commonly used proxy to observe short interest and borrowing capacity. Okay, so this is talking about Ortex. That's how Ortex does it. To measure total shares on loan, data is collected. To measure total shares on loan and shares available for loan, data is collected from the ultimate lenders of shares as well as their intermediary agents and prime brokers. However, to clear short sales, prime brokers often use their own internal inventory of shares, which means no actual borrowing takes place. Okay, let me get that again. However, to clear short sales, and so to provide shares for short sales, deliver the shares to the buyer on the other side, prime brokers often use their own inventory of shares, which means no actual borrowing takes place. By failing to take this, quote, internalization into account, approaches that use securities on loan routinely misrepresent the true number of borrowed shares. It should also be noted that there is no standard for what defines available to lend. The determination of the value of this field is different in each firm. It can be changed without notice, okay? So we've actually talked about this before. I mentioned that I thought that the data was pointing to the fact that a lot of the shares that were being delivered for short sales were not being borrowed, were coming from prime brokers, or were being basically traded among these prime brokers, large institutions that held the shares. They weren't literally going through the securities lenders. They were just being used however they needed them, or transferred, or whatever, but essentially not going through a borrowing mechanism. And here is S3 basically saying that prime brokers often do this, which means no borrowing takes place. And because Ortex, all Ortex can do is look at what's borrowed. If you have shares that aren't borrowed, that are shorted, not naked shorted, but delivered by the prime broker, they're not reflected in the borrowed shares, and they're not reflected in the return shares. So basically what I'm saying is Ortex, after reading this, and I read this whole comment letter, it's very interesting. Very interesting. And it gives a different inside look at securities lending. You know, really, is what it is. This is a securities lending data provider that's not Ortex, that is giving a window into their business and the relevant regulations. But after reading this and thinking about it and then reading it again, Ortex is total shit. This Ortex data is useless. It really is. And it makes it really puts in context this 100% utilization, because clearly shares are going out on loan, quote unquote, but how can they go on loan if there's no utilization left? It makes no sense. Well, it's one of these, the prime brokers delivering them, they're coming from a different institution, whatever, but clearly this cannot be correct. Cannot be correct. And it's not correct. And we know that it's already an estimation anyway, but here's another firm talking about, okay, when you use this method, there are ways that the institutions do this that Ortex doesn't know about, and so it results in the misrepresentation of the true number of borrowed shares, because they're not going through the typical borrowing process. So I've been meaning to mention that. There you go. Mentioned. So basically I don't know why that's there. remember putting that there. Oh, I know why that's there. Yeah. Basically, it's just, you know, it's just a matter of time. All these details, again, it's another indication that the apes have wasted their time worrying about all these minute details of the market that they don't even really understand anyway. They don't understand them properly. But the better thing to do is actually trade. Learn how to trade and invest, right? It's always better to know. But, you know, you also have you have these people that are pretending to be educators, which is absurd. Absurd. Anyway, so all we can do is try to offset this bullshit. All right. Thanks everybody for hanging out with me this evening. I appreciate it. I don't know where shit is going. Let me just be clear. More so with the market overall. I'm pretty sure we know what's happening with AMC, but in the van, took you to the tail. On the way there, you was texting on your cell. You jumped out the van before I got the room. Hopped in the car with your girl and went zoom. But as far as the market goes, I'm confused. You know, I'm not above admitting that. I have no idea what's happening. And you know, I got lucky last week, the end of last week, and that even gives me more cause for concern. Because I know I won't be lucky again, and twice in a row. And I don't want to take that chance. So, you know, we'll see. Hi, Chris. I saw you in here earlier. Thanks for being here. Have a good night. I got another woman that wants me to pimp her. Out of sight, out of mind, sipping wine, someplace Manny, killing it as always. My chin is something you shouldn't be holding. Thanks for your wit. It's much appreciated. And Lynn, I think we're going to open up the chat to shorter subscriber times next time, because give you something to do. Keep you on your feet, maybe. But other than that, thanks for being here. I do appreciate it. And also, I don't mention this enough. I don't. But we do have a Telegram group chat that a lot of people are in here, but not everybody. But I do want to put that out there, and I can just show it here real quick, I guess. You're too demanding. I gotta show her, she's outstanding. The future was looking rosy before I found out you were so damn nosy. I can tell by the way you run your mouth. You're a punk ass no class bitch from the south. So my privacy has been took. I was blind, but now it's fun. So got a lot of memes and shit here. You know, a lot of funny stuff, and some good, you know, information as well. We'll talk about all kinds of. Here's your reverse Moass rocket. But anyway, if nothing else, come for the memes. But the link to that's at the bottom of the screen. It's also in the description. So I used to mention it more, and we used to have more people, new people joining. But then, I stopped mentioning it, and we haven't had as many new members, but we have had some. So just wanted to mention that. It was meant as the, let's see here. Oh yeah, we're gonna have probably over 100, 1,000 subs. I actually haven't looked here recently. So that'll be a catalyst for sure. Absolutely. Will be. Let's see. $960. Yep. So probably this week. Yep. This week would be cool. That's probably about 3 times what we had on the last channel, the first channel. And we were doing that from like July of last year through October, November. I mean, technically November, but I wasn't doing much because I just started work again. But we're also in a much different period in the stock too. So I have to make to attribute it to that. But it's fun. It's fun. So we have fun. Anyway, that's about it. Have a good night. I'll catch you guys later. Yeah, 1,000 subs and we go to the moon. That's it. We're literally going to the moon. All right. All right. Good night.